This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast. Tom Keene out today, but not to worry. Is once again, Alix Steel getting up early, coming into the studio and helping us out. Alex, good morning.
Good morning. I love it. There's less traffic. I zoom right in. I get my coffees.
Isn't it great?
In a good place. I love that. I miss that.
And John Tucker is here. Talk about no traffic. When he gets in at 2 or 3 in the morning.
No traffic at all.
No congestion pricing yet.
Although my street was closed because they were paving it, so
Okay.
I couldn't get out.
All right, very
Always
good.
something with that guy.
Exactly. All right, we got a busy day today. Earnings day today. Our good friends at the Walt Disney Company reported earnings better than expected results, taking guidance up. So why, of course, stock's down 4%. And again,
what's up with that?
I don't know. I've been saying I've been doing this stock thing for 35 years. I have no idea how it all works. So more sellers than buyers, I guess. The core business for Disney. I think about their linear cable and TV networks, just down. The cord cutting, it's just an industry thing. But again, the streaming business, I think, is turning profitable. So that's kind of the big thing. So at just a couple minutes, we're going to have Hugh Johnston, the Disney CFO. He's going to be having an interview with Bloomberg Television. We will bring that to you in just a couple of moments as well. So that's going to be good. Bill Smead, CIO at Smead Capital Management. He's going to talk to us about value stocks, Warren Buffett, and where we go from here. So we got a lot coming up over the next few hours. We'll bring it to you. Let's get a Bloomberg Business Flash from Mr. John Tucker.
All right, let's start there. News from the world's largest entertainment company, Disney, reporting second quarter profit beat estimates thanks to sharply narrowed losses in the streaming TV business. Also higher ticket prices at the theme parks. Now, despite all that, Walt Disney shares in the pre-market, they are down right now about 4%. Stock futures overall pointing to a mixed open on Wall Street this morning, seeing some optimism. The Fed's going to start cutting interest rates this year. We also had a string of upbeat earnings results. So far this season, in the S&P 500, 417 companies have reported. And of those, 79.5% have delivered positive earnings surprises. Right now, the Dow futures 38 points higher. That's up 0.8%. S&P E-mini futures 3 points higher. And the NASDAQ futures right now pointing lower, down 13 points. As far as treasuries, the 2-year is down a basis point right now at 481. The 10-year, the benchmark, that is 2 basis points lower. We're at 445. And that's your Bloomberg Business Flash, Paul.
All right, thank you very much, John Tucker. Right now, Walt Disney Company, we're going to get Hugh Johnston sitting with the folks from Bloomberg Surveillance. Let's go to that right now.
The theme park business and the consumer price tolerance that you see, do you still have that pricing power at a time where many companies are reporting that, yes, there is upper-end stability, but maybe some lower-end fragility around the consumer?
Yeah, good morning. Great to be with you all. Yeah, I actually believe we do. If we sort of zoom out a little bit, the quarter was really a strong one for us. 17% OI growth, 30% EPS growth. That's what led us to raise guidance to 25% EPS growth for the full year, which is obviously quite strong. 2 big stories, I think, here. Number one, you were just talking about our experiences business was up 10% on a revenue basis, 12% on an OI basis. And the parks business was actually up 13% on OI. So we do feel good about that. I watch other stocks report and have seen that the value consumer is really struggling a bit and making choices right now. We're not really seeing as much of that in our portfolio of products. The other positive for us is obviously the streaming service. Last year, we lost about $600 million. This year, we're about break even, and we saw 12% revenue growth. So we're encouraged by the progress we've made in that business in a relatively short period of time.
Hugh, you said that you're not seeing that kind of price sensitivity. How much could you increase prices then from here?
It's a great question. We took prices up a little bit in the beginning of this year and didn't really see much of an impact. So as to what the future brings, we're obviously very judicious with the way that we price. We want to provide access to as many guests as we possibly can. But we do believe that the great experiences we provide, people are willing to pay for.
Hugh, let's talk about the streaming business just a little bit more, and more specifically, if we can, Hulu. I want to get into Hulu and the future of that business. Can we just start with something like the likes of Taranaga and Shogun on Hulu? Hugh, how impressive that content actually was. When you have something like that, a big hit, how does it translate into gains for the company? How does it fall to the bottom line?
Yeah, it really does create two things. Number one, it brings new subscribers in, right? We call them first subscribers. Those types of shows do pull people into the service. And then once they're into the service, they realize just the great amount of content that's out there, so that those shows also tend to increase stickiness over time. So from both perspectives, they're truly additive. And the other piece of it that's terrific, I think, is it really does integrate well with the linear business as well. So, we use these different windows to choose when to show things, whether it's on FX or whether it's on ABC and then into the streaming service. So we're actually getting quite good at reaching different audiences, streaming being a bit of a younger audience, the linear business being a bit of a more mature audience. It gives us the ability to reach the most people, which is obviously terrific from an advertising and a subscriber perspective.
That sets up brilliantly the conversation about the future of Hulu, Hugh. So let's talk about it. A report yesterday from Reuters that JP Morgan has valued the company for you at close to $27.5 billion. Morgan Stanley valuing Hulu for Comcast at more than $40 billion. Is that an accurate assessment of where things are? They also reported that we're looking for an independent valuation now to try and close the gap. Could you just update us and tell us if that's an accurate representation of the current state of affairs?
Yeah, so we have a well-defined process in terms of how this is going to play its way out. Beyond that, I'm not going to comment on that right now. One of the disciplines I have is I talk about M&A when it's done, not before it's done.
Too early to talk about a timeline, Hugh?
A little bit too early.
So, Hugh, let's talk about going forward from here, where the big opportunities are for the streaming business.
Look, I think there are a multitude of opportunities. Number one, great programming. And that's an advantage that we have in our Disney portfolio because we create so much of our own IP. Number two is driving engagement. And bundling clearly does that, whether it's with sports, whether it's down in Latin America, we're actually putting sports, general entertainment, and Disney Plus together. Or the tile that we added, the Hulu tile on Disney Plus. So that bundling is clearly an opportunity. Third is password sharing. That's an opportunity for us. We think it's pretty substantial and it's going to drive growth. Fourth is distribution cost. We do think by going direct to consumer, we can actually both build a stronger relationship with the consumer and also reduce our cost. And then fifth is technology. Clearly an opportunity in terms of recommendation engines. As we put all of that together, we're pretty well convinced that this is going to be a great growth business for the Disney company for a long, long time.
Hugh, you mentioned a number of things there, including password sharing. How much do you expect all of those initiatives you just mentioned to save money? What's the cost benefit of all of that?
Yeah, I mean, things like password sharing obviously drive additional revenue growth. Things like distribution costs do save money for you. In addition to that, things like recommendation engines and direct-to-consumer marketing tends to reduce churn, which allows you to reduce marketing costs. So there really is some synergy between the revenue benefits and the cost benefits. But overall, look, we're looking to make this into a great business, not just a growth business, but a great margin business for the company as well.
Hugh, over the past 6 months, we've been talking about the cost-cutting operations in Disney. Have we finished some of the shrinking? Have we finished the paring back? And are you back on some sort of growth trajectory?
We are definitely back on a growth trajectory. That said, we're always going to be looking hard at our cost structure, in particular looking to reduce costs where perhaps they add less value than they used to, and redeploy some of that money back into the business so that we can actually grow the balance of the business. So I think that's a never-ending exercise of looking for ways to be more efficient as a company so that you can invest in your future.
When you talk about growing, where is that growth focused on geographically? We know that in the U.S. you've got a very strong parks business. In Europe, there also is a parks presence. But in Asia, in particular in China, that has been a growth area. Is it still, how much can that be a bright spot at a time of increasing geopolitical tensions?
Yeah, I do think not just China, but all of Asia represent growth opportunities for us, both in terms of the streaming service in select markets, as well as in terms of the parks and cruises business. So we do see good growth opportunities there. Europe and Latin America continue to be good growth opportunities. And make no mistake, North America, we're not done growing yet. We still think there are terrific opportunities here for us right at home.
When it comes to Asia Pacific, is it domestic demand within those countries, specifically China, or is it tourists in the region?
Combination of both. I wouldn't tie it to one or the other. I think it's a combination of both.
And when you look at China, to Lisa's point, you know, we're going into a very heated political election coming up in November, very hot rhetoric regarding China. Is it becoming more challenging to deal with authorities in Beijing and business on the ground, given the increased geopolitical tensions?
It has not been for us. You know, one of the benefits of what we do for a living is, you know, we make people smile. We bring them happiness, right? We bring them the most magical place on earth. Candidly, the government's investing in infrastructure to make it easier for guests to get to and from the park. We're continuing to invest in that park in order to drive growth. It's doing better now than it ever has. So we're the fortunate beneficiaries of bringing people joy in a world that needs it.
Hugh, we've got to talk about the NBA deal as well. Can you talk to us about that? And if it is going to be much higher, how do you make money from something like that? I just want to understand the numbers business of all of this.
Yeah. So the NBA, we're in the middle of discussions right now. So again, I don't comment on specific deals until they're done. What I would tell you is two things. Number one, we've had a long, productive relationship with the NBA. We've benefited from it, and clearly the NBA has benefited as well. I expect that that'll continue. Number two, we'll always continue to look at the balance of our rights portfolio, and as things come up, we'll decide whether we want to continue with them in the current form, reduce them, or even in some cases, perhaps not continue to carry them anymore. So I think we'll balance the portfolio of rights, and we'll get the things that we need as the 35% market shareholder in the sports business to continue to make ESPN the true leader in sports.
Hugh, you said you won't comment on deals until they're done, but maybe you'll comment on other people's deals. Can we do that? Sony, Paramount. How would that impact Hollywood? Is that something you'd oppose?
You know, it's funny. I don't have a real comment on that one.
I didn't expect you to, but we have to ask Hugh. We've got to leave it there. It's good to catch up, sir. Hugh Johnson there, the Disney CFO, on the latest earnings. That stock is...
All right, very good. That was Hugh Johnson, the CFO of the Walt Disney Company, speaking with the surveillance team, talking about the earnings. Alex, you know, I thought some pretty decent earnings here. The stock's off 5%. I have no idea why, but maybe the expectations for a little bit better performance on some of the linear businesses, the broadcast networks, the cable networks, but some pretty solid results coming out of the Walt Disney Company. And again, I guess for this company, it's kind of all about the streaming business. And I think everybody believes that they're going to be a real viable competitor to Netflix, but it's just a question of when that business will get profitable, you know.
Yeah. I did find it interesting that if you take, there's a great chart that we have here on Bloomberg for those on YouTube audience and radio that shows the rise in streaming prices across the board, and the CFO saying we haven't seen a negative impact yet. So that's something.
Yeah, exactly. And I think we've seen it from Netflix, kind of the price leader there, and others following suit here. And people have shown, we've seen the profitability of Netflix, which is just extraordinarily profitable. And that's kind of what some of these other streaming companies are aspiring to. And I think of all the others, if you will, outside of Netflix, Disney is by far the furthest along and closest to profitability, and that's kind of the future.
What's what you were saying, that maybe the stock is down because profitability was pushed out to the fourth quarter?
Smidge.
Maybe third quarter, but that feels like splitting hairs at this point, doesn't it?
It does. So Walt Disney Company stock's off 4.8% in the pre-market trading, but again, pretty solid numbers out of our good friends at Mickey Mouse. And the theme park business continues to rock and roll. S&P futures pretty much flat. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash, being brought to you by Build America Mutual, insuring U.S. municipal bonds that finance essential American infrastructure and providing guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM insured bonds. Disney shares close to 5% lower in the pre-market after their earnings report. This comes even though its TV streaming loss was less than expected. Right now, as we look at the futures, they indicate a mixed cash open on Wall Street. Dow futures up 27 points. S&P E-mini futures up about a point. The NASDAQ futures right now, they are 28 points lower. 2-year yield, 2 basis points lower, 480. And the 10-year, 3 basis points lower. That's at 445. Investors who've been piling into bonds since Fed Chair Jerome Powell struck a less hawkish than feared tone last week. They'll absorb about $58 billion in 3-year treasuries today. The so-called quarterly refunding auctions are taking place today. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Alix.
All right, John Tucker, thank you so much. We have Alix Steel sitting in for Tom Keene today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. Our good friends at Walt Disney reported better than expected results, raised their outlook. The revenue did miss, and maybe that's what's weighing on the stock here, off 5% here. But let's kind of break it down a little bit. Ken Leone, Research Director at CFRA, joins us here. Ken, what do you make of the results from Mickey Mouse and Friends?
Great to be with you. And this was a good block and tackle quarter. It showed progression on the broader financial metrics of reducing costs and getting to their target this year of $8 billion of free cash flow. So there's financial discipline at Disney. But of course, as you've noted, there's a lot of moving parts. And ultimately, what investors would like to see is growth. Growth that can get through this transition of linear networks declining, streaming businesses increasing, but how profitable will they be?
How profitable do you think they're going to be?
It's going to take time. Streaming is a very competitive business. Unlike other subscriber businesses of the past, like cable TV or even wireless, you have very high churn. Disney at least is disciplined on the programming and content spending, which has come down significantly, and in many cases, pivoting their spend to sports from general entertainment. But I think the jury is still out there, and what we didn't see in the release today is, the magic is there, but what investors want to see is how is Disney executing on a technology platform, not just US or global? Is there an AI component to their technology plans? And you know what? Netflix is doing that, and they're there. So if you're going to be great at streaming, you have to be like Netflix.
Hey, Ken, I guess, one of the challenges for the Walt Disney Company and pretty much most of the traditional media companies is just kind of that linear TV, broadcast, cable television business. And Disney reported, weaker results. Sales fell about 8% in the quarter. How do you think these traditional media companies kind of manage the longer-term decline of those businesses?
So what we're seeing, and it's a great question, and if we were all in business class, this would be a classic where you have a mature to declining business, but it's still throwing off lots of cash, trying to reinvest that in new growing businesses that hopefully have good business models. And I think what we're seeing is because of digitalization of advertising, that shift from linear or legacy networks broadcast to streaming is happening much faster. So that's a problem.
Paul, you are a recovering media investment banker,
Yes.
right? I mean, I've heard about the death of linear forever.
Yeah.
So, I mean, what do you think makes this time different when you look at the outside?
What makes this time different is simply the revenue stream, which really supported television for the last 30, 40 years was subscribers from cable television and satellite TV. And that subscription revenue offset the decline in advertising revenue as advertising revenue went to different places. First cable and then did digital. Now that subscriber revenue is going away because of the cord cutting. So now you really have nothing to lean against. And that's what I guess most of the media companies are kind of dealing with their linear networks. So Ken, I mean, if you're the Walt Disney Company here, one of the things is the studio. I mean, the Walt Disney Film Studio dominated Hollywood for the last 15, 20 years, thanks to the Star Wars and the Marvel and all this, the Pixars and all that kind of stuff. The studio kind of stumbled over the last 4 or 5 years, and maybe people are getting a little bit tired of some of the titles and the franchises.
You just need to be good. I'll go see it. Just be good.
Exactly. Okay, well, there you go. So what do you think the strategy is there, Ken?
So we need to see better performance, not only from Disney, but also the industry. And really, when you look at global box office, ex-China, it's running 20-25% below where we were pre-pandemic levels.
Yep.
Additionally, when you look at movies, you always go to the sequels, the ones that can bring in large audiences, but sometimes they're flops and they're very costly. So I think theatrical, which for Disney feeds not only into film, but it feeds into the genre of their parks. It's a big deal. And I think when we look at what Bob Iger wants to do there, he has talented people now running those businesses. But even if you got a big hit, you look at Paramount with Top Gun Maverick over a year ago, it has not that much impact on the stock or what analysts think in terms of the fundamental outlook of a company. So it's important, but it's kind of stirs the pot, but it's really, let's not forget, we haven't had a conversation today. Why many investors are in Disney is for experience or for the parks and having these durable businesses where they have less competition versus some of the problems they have in entertainment, whether it be film or be streaming. So let's not forget about the parks, because that's really the core of their stability.
I mean, let's be honest, guys. Maverick had an issue because of Barbie. I mean, that's what really happened. Barbie trumped Tom Cruise. So let's call it. You mentioned something earlier, and I wonder how that's going to tie into the parks experience, but also you mentioned in terms of streaming, and that's the AI component. How would AI help Disney do all the things you just said?
There is incredible work that I'm sure Disney is doing to be competitive and on par to great companies, whether they be Amazon, Meta, Google, or Netflix. So it's an enormous effort on the technology side to have intelligence for personalization. And I think AI will play a role in personalization of subscriber viewership, but they can't tell that message because they're playing multi-year catch-up to the companies I've mentioned. So it's a big deal. Right now, it's a competitive weakness for the traditional entertainment companies. You have to remember, Netflix has been at this for well over 10, 15 years. And of course, the names like Amazon with AWS, they're in the linchpin with AI. So that will get the stock up more than, it's interesting, in my earnings note, I said, maybe we'll get a profitability in streaming this quarter instead of the fourth quarter. We did, but it was small. So, we have to see what's next, for Disney in coming quarters.
All right, Ken, thanks so much for joining us. Really appreciate that. As always, Ken Leone, he's the Director of Research at CFRA Research. We appreciate it. Are you a Disney theme park person, Alex?
Ooh, setting me up. So I booked my first go with my daughter. She doesn't know. She's not listening.
Okay. Very good.
In October, we're going to the Safari Hotel thingy.
Yeah.
So I haven't been in, 20 plus years. So this will be a moment.
This will be a moment.
But booking it was scary. It was just very complicated. Like,
really?
Where do you get tickets? How you do it through the hotel?
You need an advisor to help.
I needed
they have
to do that. Oh, I'm sure they do.
Crazy.
Yes. And then also, I don't know about the lines. Like, I feel like a complete Disney virgin right now, and it's very scary.
So
it leaves me exposed.
I guess my thought would just be pay the most I possibly can so I don't have to wait in line as much. But
that's
I think
usually
that's what
I do.
I think that's, no matter what, I think we're going to be waiting in lines. But again, they keep raising the prices. People keep coming. It's, as Ken Leone was saying, it is a huge part of their profitability going forward, and it really is a theme park business with some entertainment stuff around it. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Investors gaining some confidence the Fed's going to be able to start unwinding elevated rates while companies deliver some positive earnings surprises. Your earnings scorecard so far. In the S&P 500, 423 companies have reported. Of those, just about 80%, just over 80% have delivered positive earnings surprises. That brings us to Disney shares falling in pre-market. Profit did beat estimates, but revenue came up short of projections. Also, overall, Disney Plus subscribers coming in lower than expected. And in the pre-market, Disney shares right now down just about 6.2%. Also, among the most actively traded shares of Tesla, they're down 1.4%. It's facing a July 1st deadline to furnish regulators with information about its biggest ever recall. That's because drivers using autopilot keep crashing while using the system. And Sony Group shares sliding the most in almost 3 months after its proposal to buy Paramount Global. That is raising some financing concerns. Dow futures right now up 18, S&P E-mini futures dead flat. And the NASDAQ futures 33 points lower. 2-year yields down 1 basis point, 481. The 10-year 2 basis points lower. That's at 445. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on that internet thing called YouTube. So head over to youtube.com and search Bloomberg Podcast here. Let's check in with our next guest here, Steve Eisman, Senior Portfolio Manager at Neuberger Berman. All right, I'm looking at, I guess, Steve, you were on the Odd Lots podcast recently, and you said that you are bullish on stocks that gain from artificial intelligence power needs. What does that mean?
Well, good question.
Thank you. I'm front-running Alex because Alex is our energy guru here.
The current GPUs use about 3 times more electricity than your typical CPU. So the grid in the United States has been under pressure now for years. You know, utilities keep increasing their CapEx budgets, and now you've put an entire new pressure on the grid. So whatever money is being spent on the grid is going to keep going up probably for the next 10 years. So just to give you just one stock, for example, you know, when utilities announce that they're increasing their CapEx budgets, utilities don't actually do anything. You know, what they do is they send you electricity and send you a bill. But in terms of construction, that's done by a company called Quanta, which is the largest engineering construction company for utilities. So
Quanta.
The only thing I would tell you is that every time the CEO gets on the quarterly conference call, he just looks happier.
That's fair.
Yes.
If demand's going to grow 5-6%,
it has nothing to do with himself. He can't satisfy all of the demand. So that's just one example, but there are other companies that benefit as well. But I think there are 3 major themes of our time: AI, infrastructure, and crypto. And I believe in the first 2, and I don't believe in the third.
So just for framing here, I mean, you really made your name through the housing crisis and betting against housing debt back in 2008. You're portrayed in the Big Short film by Steve Carell.
I had to bring that up, but okay.
I did, but just to give context, if our viewers or listeners don't know, like, you have a history of betting, having contrarian bets that pay off big time.
Yes.
What would be that contrarian bet? Out of the 3 things you just said, what's that big contrarian bet?
I don't have a contrarian bet here. I mean, I don't like crypto.
Not liking crypto feels contrarian.
Well, it's contrarian in the sense that I don't believe in it. I think the whole thesis behind it is wrong. But, you know, shorting a cult when there's no data to prove that it's wrong is a death wish. You know, so what do I mean by that? So when I bet against subprime mortgages, every month securitizations produce data. They give every single credit quality data possible. So every month you could check, is it getting worse?
Like there were facts you could look at to back
every month you looked at the fact, and that fact, credit quality, was the major determinant of the value of subprime mortgage paper. So you had a data point every month, a massive data dump. Crypto trades on Ether. You know, what does it trade? The thesis that crypto is that it's a hedge against fiat currency. So it's like digital gold. But it doesn't trade like that. It trades in perfect correlation with NASDAQ. So it trades against its own thesis. So what data point is there to show that crypto is wrong? I mean, if the deficit came down, it's not relevant because that's not how it trades anyway. So there's nothing to do.
What's your macro call here? I mean, there's a lot of folks in the marketplace saying, you know, this Federal Reserve is going to cut rates in 2024, maybe not as many times as we originally thought, maybe not as much as we originally thought, but that this economy is in good shape, but still there might be some rate cuts here. Is that kind of the backdrop that's for you, or how do you think about it?
I mean, the way I think about it is that Powell is a dove. He has always been a dove. Raising rates was completely against his nature. He wants to cut rates because he always wants to cut rates. The data is not completely in his favor, so maybe they cut once. Do I think they should cut it all? I would personally, I would wait, but trust me, nobody consults me.
No one consults us either. It's very strange.
So I think they'll probably cut once, is my guess.
So does that affect, so the thesis that you have, like the infrastructure, the power demand,
and AI in general,
and AI in general, does what the Fed does
it's
in the
irrelevant.
last, it's irrelevant.
It's completely irrelevant.
Does it change how you play those themes or
Not
the
at all.
timing? Okay.
I mean, this is what I think. Credit quality in the United States is fine, other than office real estate. And office real estate is not big enough to sink the economy. It's a problem. It's a regional problem. It's a regional bank problem. It's some investors' problem. The consumer's not over-levered. The housing market is not in fuego. There's a shortage of housing. So the financial system of the United States has never been this healthy in anyone's lifetime, period. So all the things that existed prior to 2008 don't exist today. You have a very dynamic economy with some very, very powerful themes. The Fed cutting or not cutting rate makes headlines for a couple of days. But when you think about it, if the Fed cuts rates once or twice or no times, I mean, at the end of the day, who cares? It's de minimis. It's not. I mean, the Fed raising rates 500 basis points.
Yeah, that got your attention.
That got everybody's attention. The Fed cutting rates 25 basis points or 50 basis points and then stopping, like everybody get a life.
Right. All right. In terms of getting a life on AI, a lot of well, I'll just speak for myself. I'm trying to figure out how much of this AI stuff, and I'm putting in air quotes here for our listeners, is incremental tech spending. Or is it just taking some money from IT or other tech budgets and putting it to?
It depends on which
AI?
subsector you're talking about.
Okay.
So if you're talking about the semiconductor sector, where it's NVIDIA or AMD, it's massively incremental. You know, if you're talking about overall tech spending, at this point, not clear. What is pretty clear is that companies like some of the IT consulting companies have no revenue growth because it's taking Peter to pay Paul.
Yep.
So, and software, unclear. So it's only very clear in hardware.
Let's overlay the presidential election with these theses. Thesis?
Thesis.
Just thesis is plural and
with the
singular?
ES, I think maybe.
Okay.
Okay.
It's important. I took Latin for a while.
Theses, but this is a thesis.
Theses.
Theses.
Okay, so what is your prediction for the election? And how does that impact? Because a lot of what you're talking about is driven by fiscal policy.
Okay, so let's
infrastructure.
backtrack for a second. So first of all, caveat, whatever I'm about to say, I am not speaking for Neuberger Berman. I'm speaking just for myself because I don't want to get into trouble. So it's May 7th. We're how many months? 5 months, 6 months from the election?
Very far.
And as far as I'm concerned, the election is baked. It's done.
Which is?
And Trump's going to win. And I think he'll win every single swing state. And this is how it's going to play. So at this point, the protesters, and what I'm about to say has nothing to do with who I'm going to vote for, what my predilections are. This is just pure analysis. The protesters on the college campuses have rapidly become the face of the Democratic Party. Not completely. But that will be solidified because I am 100% sure that in August, at the Democratic Convention in Chicago, irony, when you think about 1968, they will all be protesting there, and they'll be screaming and yelling, and they'll be screaming and yelling a lot of things that are anti-American, and the country is going to be appalled. And at that point, it'll be very, very clear that Trump will win. But as far as I'm concerned, this reminds me a little bit of August 2007. If you look back at the financial crisis, the crisis took place in the fall of 2008. But in August of 2007, subprime paper had collapsed. The crisis was baked in August of 2007. The rest was just an inevitable play. So I kind of feel about the presidential election right now. It's baked, but the only people who don't know are the voters.
All right, we'll see how that plays out in the marketplace. Steve Eisman, thank you so much for joining us.
Back.
Steve Eisman is a senior portfolio manager at Neuberger Berman, joining us live here in our Bloomberg Interactive Broker Studio. Right now, the S&P futures absolutely unched on the day. I'll call that out for Lisa Bromwich because I know she doesn't like that term. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and John. Talks on a ceasefire in Gaza enter a critical phase. Hamas claims that it has accepted a ceasefire proposal, but Israel says the deal accepted by Hamas did not meet its core demands. U.S. National Security spokesperson John Kirby.
We still believe that reaching an agreement is the absolute best outcome, not only for the hostages, but for the Palestinian people. And we're not going to stop working to that outcome.
Today, Israeli troops took control of the Rafah border crossing area in Gaza, with Hamas saying all aid flows from Egypt had stopped. Another American has been detained in Russia. Pentagon officials say he's a U.S. Army Staff Sergeant stationed in Korea and was detained after being accused by Russia of beating and stealing from a woman. Gordon Black's mother says he had gone to visit a girlfriend. U.S. officials are still seeking the release of two other Americans, former Marine Paul Whelan and Wall Street Journal reporter Evan Gerskovich. President Xi Jinping vowed to never forget NATO's deadly bombing of the Chinese embassy in Belgrade. The comments come during a swing through Europe that's amplifying fissures in the Brussels support for the U.S. She, in a Serbian newspaper, says 25 years ago, NATO flagrantly bombed the Chinese embassy in Yugoslavia, killing 3 Chinese journalists. The prosecution in Donald Trump's hush money trial is trying to tie him directly to payments to Stormy Daniels. Bloomberg's Ed Baxter has the story.
Former Trump controller Jeffrey McConney has offered a detailed look at how Trump reimbursed Michael Cohen and that Cohen had paid Daniels $130,000 to keep quiet in the lead up to the 2016 elections. Meanwhile, the judge has imposed another $1,000 fine and has threatened jail time against Mr. Trump. Mr. Trump responded outside court.
The judge has gagged me, and I'm not allowed to talk about, I guess, his total conflict.
Saying the Constitution is more important than jail time. Ed Baxter, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, John.
All right, Mr. Tucker, thank you very much. We appreciate that. Looking at the markets here, not a whole lot of movement here, Alex. I think, I guess it's a little sense of kind of where we're going to go with some of the economic data coming up. Earnings seem to be coming in pretty decent for the most part. I mean, 8-9% growth in earnings year over year. But I think people are just kind of stepping back and saying, let me see what this Federal Reserve is going to do here.
I'm going to make your day and
Please.
talk about the bond market because you're going to get so excited. There is about $58 billion of 3-year notes coming today. One, we care because we want to see what kind of yield will interest
But I don't
investors.
understand the reporting of it.
Okay.
So when the headline comes across, I don't understand anything that it says and whether it's good, bad, or indifferent.
The bid to cover ratio.
That's the one you got to pay attention to. The
Okay,
higher, the
explain it
better.
to me.
Higher, the better.
Higher, the better.
Means
Higher,
there's more demand.
Means there's more demand.
Yeah. If it's lower, it means they probably had to increase the yield to entice investors. So higher bid to cover is better. That's what I look at it. I'm sure there's more. I'm sure Ira Jersey has lots of different ways of looking at it, but that's how my nerdiness winds up looking at it. So I'm looking at that. Disney, though, still down. I want to point out Crocs for a second because some of their numbers were pretty good.
Crocs?
Yeah.
Do you wear Crocs?
No.
No.
Please.
Me neither.
Please.
Yes, exactly.
I mean, did you not see the shoes I'm wearing right now?
Yeah, she's got the Nancy Sinatra.
Totally.
These boots are made for walking.
The high heel platform
1970s.
thing.
Are you going to do some damage?
But my, I don't know. My daughter wears Crocs. Anyway, that's stock off 3.5%. This is Bloomberg.
Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. After Monday's rally, the stock futures this morning indicate a mixed cash open this morning. Overseas, the stock 600, that rose to its highest level in more than a month. Yeah, Walt Disney reporting fiscal second quarter profit. They beat estimates. Still, the revenue came up short of projections. So the shares about 6% lower in early trading. Also in the pre-market, Palantir shares dropping as much as, close to 12%. This comes even after the software company boosted revenue forecast for the full year. You have an analyst over at William Blair noting the company's commercial revenue growth in the U.S. that sharply decelerated in the quarter. Disney shares again falling pre-market, and Tesla shares they're also on the most active list this morning, down 1.5%, facing a July deadline to furnish regulators with information about its biggest ever recall. Dow futures 19 points higher right now. S&P E-mini futures unchanged, and the NASDAQ futures down 37 points. And ahead of this auction today, treasury auction, how exciting. 2-year yields 1 basis point lower, 481. 10-year 1 basis point lower, 446. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
I get the sense he's mocking me.
No!
Yeah, I mean, is that, can I infer this from,
what did I do
from
on my day
action?
off? Yesterday?
You worked on your bathroom.
And I spent part of the day just going over Treasury Direct website. It's a great
No,
website.
You didn't.
I swear to you.
To do what? You didn't look at the Met Gala dresses, but you did that?
Check at it, because I thought maybe I'd want to make a bid today.
You didn't go down to bars and have a cocktail at the bar?
No.
I was there Saturday or Sunday. I forget which day.
It wasn't Sunday because Sunday was
What did
crappy.
you have?
Yeah.
What did you have?
No, I just said we were just driving around, trolling around that area, and we stopped into bars for a cocktail.
I stopped there with my daughter because we were going out to dinner, and she said, "No, let's go somewhere else." So we did.
Okay, very good.
see
Bars, one of my favorite places in the Highlands. Bad day, I think, to be the IR, investor relations persons at Disney, because you probably told Bob Iger and told the CFO, hey, you put out profitability in streaming business, the stock's going to be up, stock's down. I mean, so, and again, the Bloomberg reporting is saying maybe the subs came in a little bit light on the streaming service, but I don't know. I'm going to go back.
It also had a good run.
Yeah, it had a good run.
Yeah.
It had a good run. But if you're the IR person, they're like, hey, what do we need to put out in a release so the stock will go up? He says, do this. They did it. It still didn't work, so we'll have to see.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
All right, folks, your daily look at the front pages around the world is brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low, transparent commissions. Learn more at ibkr.com/bonds. Mr. John Tucker, newspapers, a lot of them out there, not as many as there used to be, but a lot of newspapers out there. Although you go to an office in London. Let's say you have a meeting in an office in London. You go into the waiting room, dozens of newspapers on the table. It's still big in London.
It's an interesting. You go down to City Hall. Room 9 is the press room, and outside is a plaque of all the newspapers that have gone out of business in New York City.
Yep.
And
all right.
it's a big list, and it's kind of sad.
Well, I don't know if you guys know that, but you can also get papers on the interweb now.
Really?
Yeah.
Really?
Isn't that amazing?
I'm going to tell Carol Masser that she doesn't have to print out every single piece of information, that she can have it like maybe on her screen.
Okay. Well, let's start here. If from the Bloomberg this morning, if you want to get somebody's attention on Wall Street, what do you say?
Bonus.
Or if you want clicks on the Bloomberg terminal.
Oh, I can imagine. After 2 pretty lackluster years, they are set to jump, especially on desks that help companies tap markets or trade their bonds. According to a report today from the compensation consultant Johnson Associates, bankers who underwrite debts may see payouts swell as much as 25%. Deals picking up this year. For bond traders and equity underwriters, the incentives may rise 20%. Alan Johnson is the managing director of this firm. He says, in general, employees in financial services should be pretty pleased. And
this is way too early to be even talking about bonuses. I've had managers come in when I sit in my bonus meeting, and we ripped it the entire year. Some knucklehead lost a couple $100 million in like the last week of the year, and that is the excuse my boss is like, we're not going to pay you. Like, what?
So
I mean, stinks.
Yes,
the
exactly.
average cash bonus that declined 2% last year. It was $176,500.
Maybe they're like, just please don't go to a hedge fund or something.
Right.
Yeah, but it's explain to everybody. You live on your bonus.
You used to. I mean, back in my day, it was 90 to 95% of my annual compensation was my bonus. That's changed. Now they make it much more your salary versus your bonus, but still the bonus is material.
99% was your bonus?
Yes. Yep.
Holy moly pants.
Yep.
All right, let's do this one from the Wall Street Journal. Kind of skipping around here. Men happier at work than women.
No.
That's how they feel overall about their jobs. Most workers are positive. You dig deeper, though, you find about 65% of men say they're happy with their jobs compared to 60% of women. The largest gaps in satisfaction between men and women related to financial benefits, despite many companies introducing more family-friendly policies such as daycare at work, mental health services. The women surveyed were less satisfied with their jobs than men for the 6th year in a row. Women in particular might sense a more profound loss of remote work benefits as employers continue to push for their employees to show up more. And of course, I'm going to harp on this because I always do. Child care for moms is especially tough. And when you're a single mom, it can be like devastating.
Right,
Yeah.
and we know. Yep.
I'm shocked. I'm shocked by this survey.
Well,
shocked,
no, I think
tell you.
I think a lot of people at the top might be shocked or maybe uninformed.
Really? You should talk to people and
They should
it
talk
wouldn't
to
be so
people.
shocking.
I mean, I remember, when Matt Miller came back from Germany for Bloomberg, he worked and he was, again, kind of it just shocked him to come back here and to say, oh, in Germany we had just wonderful health care, it was free of charge, blah, blah. Now he's paying $1 gajillion and his daughter is in like the basement of some church in Westchester, paying $1 million a year. Crazy.
And that's a good slot.
Yeah, that's a good slot, and that's a good slot.
Super good slot, yes.
So very tough. Okay.
All right, let's do this one also. What happened to the tax credits? More governments are slapping fees on electric vehicles, reporting from Bloomberg this morning. We all thought governments were trying to encourage the use of EVs, but the shift away from combustion engines, that is actually leaving a $110 billion hole in government revenues owing to a drop in receipts from fuel taxes. So you'll have a lot of states and governments across the world among jurisdictions introducing tax changes and charges on EVs and hybrid vehicles designed to raise funds and compensate for the declines in gasoline and diesel excise taxes.
So to this point, actually, I think there was an article in the FT yesterday that talked about in Germany in particular, they're rolling back some of the subsidies that they gave, not just for things like EVs, for example, but like heat pumps and stuff like that. So consumers spend a lot of money to then get a rebate, and then all of a sudden the rebate goes away. They don't know if they're going to get it or not. They wouldn't have done it otherwise. It gets complicated. And the idea that the government will have to spend money to make all this work, full stop, period.
Yep.
And we'll conclude with this one from Bloomberg. Oh my gosh, Taylor News. Apparently, the Paris Olympics is drawing luxury travel demand, but guess who is the bigger draw?
Tay-Tay.
This week, the superstar playing 4 shows at La Défense Arena. This is just outside the capital, so it kicks off the Eras Tour, the European part of it. Total seating capacity, 40,000 per show. So this event is just a fraction of the size of the Olympic Games, and yet the concert's drawing 5 times as many Americans as the Paris Olympics. This according to the luxury travel agency Embark Beyond. Embark's co-founder, Jack Haslam, tells us that she's overshadowing the Olympics, that among the more than 200 Paris trips that his company has planned for Swifties, the average length, 3 nights, clients usually staying at luxury hotels. Around a third of the groups are mother-daughter pairs who want to schedule shopping sprees around the concert.
I was telling Tucker earlier, I looked into this just for fun, and it would be cheaper to go to like Sweden and see the concert, or even Paris or the UK and see her concert than to go to Miami.
Yep.
In terms of the ticket prices, just putting that out
But
there.
I'll note, over the weekend, who drew like a gajillion and one fans down in Madonna? Where was she?
Oh, Brazil. Wasn't she in Brazil?
Like Rio.
You asked Tucker that question?
Yeah, exactly. But I mean, Madonna still, like hundreds of thousands of came to see her concert down in Rio.
Dude, she's Madonna.
She is, Madonna. All right, speaking of big acts, how about our good friends from Dublin?
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Rob Sockin. He's a global economist over there at Citi. One of their good friends at Citi thinking about this economy. Bill Smead, CIO at Smead Capital Management. Big follower of Warren Buffett and the Berkshire Hathaway folks. So we're going to check in. What did he take away from this weekend from Mr. Buffett? Deborah Cunningham, CIO at Global Money Markets at Federated Hermes. She's going to join us to talk about this market here and inflation. Has it been whipped or not? Bloomberg Surveillance today is brought to you by CohnReznick Advisory Assurance Tax. CohnReznick. Let CohnReznick's enterprise risk advisors help you build confidence in your supply chain using data analytics. Visit CohnReznick.com. Let's check in with Mr. John Tucker. Get a Bloomberg Business Flash, John.
All right, thanks a lot, Paul. And Alex, let's start with this one crossing the Bloomberg this morning. Uber and Instacart are taking on DoorDash. Uber and Instacart teaming up on restaurant deliveries. Another way for my youngsters to separate me from my money. Right now, Dow futures 28 points higher, and the S&P E-mini futures up 1 point, and the Nasdaq futures right now, they are down 28 points. Of course, we had news from the world's largest entertainment company, Walt Disney, reporting second quarter profit beating estimates. Thanks to sharply narrower losses in its streaming TV business, higher ticket prices also at theme parks helping there. But revenue, that came in, that was a miss, and then you had streaming subscriptions. They also fell short of estimates in the pre-market. Disney shares are lower. Apple entering the arms race over data servers. According to the Journal, Apple's been working on its own chip designed to run artificial intelligence software in the data center servers. And Boeing supplier Spirit Aero reporting adjusted loss per share for the first quarter. Again, S&P futures up a point, Nasdaq futures down 27, the Dow futures, they're up 30, and with an auction today, 2-year yields right now unchanged, 482. The 10-year yield right now down a basis points, that's at 447. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Alex.
Instatart? What would Instatart move? Sweet tarts? Candies?
I don't know what's on my mind this morning.
I mean, I'm the last one to make fun of someone for mispronouncing things because that's what I do. But
is that what I said?
Instatart is
Why
an
do I
amazing
feel that's going to
company.
make the best of real?
That's Instatart. That's how I get my candy. All right. Okay, I'm looking at the WIRP function, WIRP, on the terminal. It shows the world implied probability of what the Fed's going to do, hike, cut, etc. And right now we're looking at one cut priced in for it looks like September. A totally different world than just a few months ago. It seems like a hike, though, has finally been taken off the table. So kind of now what? We have to wait for next week to get the latest inflation read. So what's your outlook? Let's ask Robert Sockin. He is a chief economist over at Citi and joins us on their latest global economic outlook. Rob, it's great to get your perspective on this. Now, you guys highlighted last month that global growth is likely to kind of step down this year to about 2.3%. That's still not that bad. Do you think central banks need to be aggressive or cut a lot in that environment?
This is a really key question. And if you went back to the beginning of this year, we were really looking for a much sharper slowdown in global growth. This would lead to even sharper falls in inflation, which could start to let central banks ease sometime around the middle of this year. What we've seen in the first quarter is much more resilient activity than we thought. As you mentioned, 2.3% global growth is our forecast. That's still not great. It's a fair amount below trend, but it's notably higher than we thought at the beginning of the year. And most economies have shown better growth than we've expected. At the same time, we're still seeing fairly sticky inflation globally on the services side. And that's going to lead central bankers, I think, to be more cautious in their easing cycles. So growth is resilient. That's good news. It could be even more resilient than we currently expect. But at the same time, that's leading to resilience on the inflation side for a lot of economies. And that's going to lead to relatively cautious easing cycles in most cases.
Rob, a lot of folks have been talking about, from an economic perspective, the exceptionalism of the U.S. economy vis-a-vis, say, Europe, notably Germany, for example, or in Asia, notably China. How do you guys think about that at Citi? Because there's no more global financial institution in my mind than Citigroup. How do you guys think about that?
Yeah, absolutely. And, as I noted, we've seen a lot of resilience this year, and we were surprised to the upside when it came to the global economy last year. We were looking for a slowdown at the beginning of 2023 that didn't materialize. The global economy ended up growing near trend. Most economies beat our forecast last year, and as I mentioned, most surprised to the upside this year, but it's really been the U.S. that's been exceptional throughout that period. The U.S. was our biggest upside surprise last year for major economies. And, Q1 GDP still came in fairly solid, especially if you look at that domestic demand component. Now we're seeing some other positive growth stories maybe playing out around the world. We recently upgraded our China forecast to 5% off of better data at the beginning of the year. And the Euro area, we're starting to potentially see some green shoots as well. They've had a particularly tough time in this environment, but some of the PMIs have really improved there. GDP was better than expected in the first quarter. So overall, you are starting to see some better growth stories in other parts of the world, but it's really come down to the U.S. economy being the exceptional outlier, especially within developed markets. And, there's a good chance that could continue. We think things will slow down more as you go later into this year. But again, the data have consistently surprised us to the upside in the U.S.
I love that you brought up Europe, because I just want to hit on Germany for a moment. Germany's factory orders today weren't great. Services in Europe definitely picking up. Manufacturing in certain areas in Europe stabilizing. What do you think is going to happen to the manufacturing sector in Germany? It's so hard for me to find a green shoot there.
Yeah, you hit on a really key topic within the global economy, which is last year, services were really driving the resilience. And if you look at what's happening this year, you're still seeing fairly resilient services activity. And as you mentioned, the services measures within Europe in those PMIs have really been picking up, but we're still seeing manufacturing softness in developed markets. If you look at the manufacturing cycle globally, it's a lot better than where it was at its worst point earlier in the cycle. Most of that has been due to emerging market economies that have been recovering. The developed market indicators for the manufacturing sector are fairly soft across the board. If you look at the manufacturing PMIs, they're pretty much below 50 in almost all cases for developed markets. And Germany has really been struggling in this environment of soft global goods demand and weak trade and manufacturing activity. I really think it's going to take a stronger recovery in global goods demand to really help lift that German manufacturing sector. Maybe it'll happen sooner than we expect. I've been thinking it's going to happen later towards the end of this year. Maybe there's some risk that it'll happen a bit sooner, but I really think you need the global cycle to turn more strongly for Germany's manufacturing sector to really get a stronger recovery. And as we start to get rate cuts later this year, that'll help the manufacturing activity. So I do think it's an end of this year story, beginning of next year story, but potentially could happen sooner.
China outlook. To me, China is such a tough nut to crack here. Do you have confidence in that economy here? I just think about the demographics there are not positive for China. I think about they continue to isolate themselves. It just seems like a tough market to get bullish on. How do you guys think about it?
Yeah, absolutely. And the way I've been thinking about it is I have a fair amount of confidence that China's economy can perform well this year. I think there is enough pent-up demand among consumers. I think there is enough activity on the trade side for them that they could still have a decent growth performance in 2024, which is why, as I mentioned, better data at the beginning of this year led us to mark up our growth forecast to 5%. However, as you noted, I am very concerned about longer run potential for Chinese economy. I look at an economy that has a wide range of concerning issues, from still overhang of debt and restructuring within the property sector that's needed, aging demographics, still very high youth unemployment, which is a cohort that really you should be looking the most to get into jobs right now, given those aging demographics. And there's a lot of work showing that chronic tensions within the U.S. Are weighing on activity within that economy. And we are seeing global production and global supply chains move away from China on the back of these tensions and other factors. So this year, I think the Chinese economy is going to be in good shape, but I'm also very concerned about the long run prospect given these range of issues. I think policymakers there have a lot of tools in place that they can use to address these factors, but there's no question there's an enormous number of challenges.
All right, Rob, thanks so much for joining us. We really appreciate that. Rob Sockin, he's a global economist over there at that little bank we call Citibank. Rob, thanks so much for joining us with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, Alex, and John. The Israelis have seized control of the Gaza Strip side of Rafah border crossings with Egypt and are moving ahead with their offensive there. The European Union's top diplomat, Joseph Borrell, says Israel ignored international calls to refrain from this offensive.
I am afraid that this is going to cause again a lot of casualties, civilian casualties. Whatever they say, there are 600,000 children in Gaza.
And Borrell says there is no safe place for them to go. Meanwhile, the ceasefire negotiations are stalled with Hamas accepting a deal, but Israel saying it does not meet its core demands. An American soldier is behind bars in Russia. Local media reports Army Staff Sergeant Gordon Black is accused of stealing and beating a woman. Black may have been visiting a woman he met while stationed in South Korea. Black's mother, Melody Jones, describes the couple's relationship as volatile and says she was worried about her son visiting Russia.
I'm hoping he's not being tortured or hurt. It's just hard being a mom and being in that situation and not knowing, not being able to touch him, hug him, tell him it'll be okay.
Sergeant Black is the latest in a string of Americans detained in Russia, joining Marine veteran Paul Whelan and Wall Street Journal reporter Evan Gerskovich. Meanwhile, Russian President Vladimir Putin has secured another 6-year term in office. As the Russian national anthem played, Putin addressed his country today after taking the oath of office. In a short speech, Putin said that Russia was open to developing relations with other countries he described as the world's majority. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, Michael Barr, thank you so much. We appreciate it. All right, Alex, there are many things I will pay for willingly for my kids, like college tuition, car insurance, health insurance. One thing I will never pay for is like this food delivery stuff.
Oh my God, no.
Total scam. It showed up, my 19-year-old, he's a freshman in college, it showed up like the first week of school in September. I said, I shut off the credit card for like a week. I said, never will I pay for that. Eat like a $15 McDonald's orders. They tack on like $15 for delivery.
I know, it's crazy. I mean, okay, maybe if it's snowing.
Instacart is one of those.
Instacart is definitely huge on that. But I feel the same way. I mean, once you add on tip and once you add on delivery fee, it's like 2 times as much.
But the kids do it all. It's a natural.
Get your lazy butt up, walk outside, and get your own meal, man.
I'm in the same boat.
Please.
I canceled my card and had to get a new credit card like 3 times so far.
Too many Instacart card charges?
Yeah.
Not happening. I mean, again, I'll
Good for
pay
you.
for a
Put that
lot of
down.
stuff for these knuckleheads, but I am not paying for food delivery, especially from like fast food. It's one of those crazy things of this interweb. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Ahead of the cash open on Wall Street, the futures right now, they're mixed to lower. The S&P 500 futures up just about 2 points. Dow futures up 18, and the Nasdaq futures right now 25 points higher after yesterday's more than 1% rally for the S&P 500. Instacart partnering with Uber to offer restaurant delivery through the Instacart app. Instacart users in the U.S. will be able to order from hundreds of thousands of restaurants using an Uber Eats interface. That's going to become available within the Instacart app sometime in the coming weeks. So this marks a threat to DoorDash. Walt Disney in the pre-market, those shares lower. They reported fiscal second quarter profit beat estimates. Still, revenue fell short of projections. And a week light on data, but heavy on Fed speak. Minneapolis Fed President Neel Kashkari, he's set to talk today. Again, the Dow futures up 18, S&P mini futures up 1. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker at your Bloomberg Business Flash. Alex and Paul.
One of the many things I like about our next guest, John Tucker, is on his resume, Drexel, Burnham, Lambert. You remember that?
I do remember them.
Yes.
There were certain individuals there who really stood out.
And actually, one of those individuals is hosting a conference of world leaders in Beverly Hills as we speak. So, but anyway, for the kids out there that don't know Drexel, Burnham, Lambert, go Google that heck of a firm back in the day. Bill Smead was there way back in the day. Bill, I'm not going to tell people how long ago you were at Drexel, but Bill Smead, CIO of Smead Capital Management, joins us here. Hey, Bill, our good friends at Berkshire Hathaway got together over the past weekend out in Omaha. What were some of your takeaways? I know you pay attention to this kind of stuff. What were some of your takeaways from this year's meeting?
Well, it really seems like the end of an era. Charlie Munger was the sriracha sauce of the meal. And we miss Charlie a lot because Warren is a kind and gracious and wonderful and wise straight man, but Charlie would say the things that other people don't like to say, and straight to the point. And it's so for that reason, and the fact that it's late in Warren's participation also that made it kind of a bittersweet meeting.
And so, Bill, I've heard that from some others, but again, I take your perspective more so than others because you've been such a long-term student of Mr. Buffett and Berkshire Hathaway. How do you think this transition over the next year or two or three or however it plays out, how do you think that's going to play out?
Well, it's such a good question. You know, once upon a time, conglomerates were really popular. And what Berkshire Hathaway is now is a way above average conglomerate. And there is safety in that conglomerate, but there is also a natural gravitation toward the average of what the indexes do in the process of being such a gigantic corporation. One thing people don't talk about a lot is it's been so long since we've had a 10-year period where the S&P 500 didn't do well, and it's been so long since people had 3 or 4 consecutive years of doing poorly in the stock market. No one's thought about what effect it will have on very large cap companies, the 500 billion plus companies, when there's net selling of passive investors when we get into an era when the market does poorly for an extended period of time. Berkshire Hathaway will be one of those companies, right? In other words, let's say markets are rough for 10 years, people are net sellers for 10 years, the S&P 500 index, that is going to hit the biggest stocks in the index way harder than it is the smallest stocks in the index. And so Berkshire Hathaway is a wonderful conglomerate and not to be thought of, in my opinion, as what it used to be, which was an unbelievable compounding machine with the 2 best stock pickers of all time at the helm.
What I also stood out to me is how Buffett doesn't trust that AI hype that we all keep talking about. Bill, what do you think of the AI hype? And I guess, do you trust it on an NVIDIA level, or do you trust it on like a power demand level? What did you think of that?
Well, it's a subject that's pretty near and dear to me. We have a missive coming out today that I am arguing that it's what Munger said. It is a legitimate development. It is real. It is legitimate. It will be powerful. Now, go back and look at the legitimate, powerful technology developments of the last 100 years. The radio in the 20s. There was a tremendous surge in RCA's price the last 2 or 3 years before the market topped in 29. And then you really wanted to wait until 1941 to buy the stock. And then the next 27 years after that, it was spectacular. But the people that chased the stock the last 2 years and held it through, say, 1941, got a very, very poor return. So fast forward to the go-go 60s, and there was a lot of hype. And what happened is Buffett closed his partnership, and T. Rowe Price started buying oil and gas and started the New Era Fund. They pivoted, and from 1969 to 1982, the glam stocks, including the ones that peaked in 72, the Nifty 50, were incredibly poor performers. So you had to wait if you were excited about the television industry or you were excited about computers. You had to wait quite a while before you invested. And then lastly, the hype around the internet. The internet did change our life. And if you bought in 98 and 99 during what Greenspan called the irrational exuberance, you got your head beat in. I think Amazon, we looked, Amazon and Cisco lost 80 or 90% of their value between early 2000 and 3 years later. So what happens is you don't have to catch the initial thrust. In fact, you're at a great deal of risk if you get caught in the first big decline after the initial thrust. And that's the risk people are running in the NVIDIA. Whether it lasts another year or two on this first thrust, who knows?
Right.
It very well could. But the time to invest usually is about 10 years after, because those hypes and those thrusts are occurring in a financial euphoria episode.
Right. Hey, Bill, again, our good friends at Berkshire have close to $200 billion of cash on the balance sheet. If you had that kind of capital, what would you do with it?
Well, he's doing one of the things we would do with it, which is buying into the oil and gas business. Whether it be natural gas, which is finally beginning to wake up a little bit, the amount of electricity that is going to be demanded by data centers and AI and all these various things is enormous. 41% of electricity is created with 40% of that is natural gas. So we would be going into that area aggressively. He has, but he's so big that he can't do it in anything below a $50 billion market cap company. In fact, remember when they were buying Oxy at $45 to $60 at the annual meeting 2 years ago, Charlie Munger said the only reason we're able to do this is because stocks are trading like a casino. There was so much activity on Oxy that they could get into it. So yeah, there are lots of very attractive oil and gas businesses in the $5 billion to $40 billion market cap area but again, $200 billion is an unbelievably large amount of money, and it just shows you how bearish Buffett is, that he's stacking up that much money. In other words, he could hand it off to his underling guys and they could buy smaller.
Bill, we gotta leave it there. It's really good to catch up with you. Tell Cole we say hi. Bill Smead, CIO at Smead Capital Management, joining us there. You're looking at futures a little bit mixed. The S&P pretty much flat on the day. Some of the big movers, though, Datadog down by about 10% in pre-market. Palantir Technology down by about 11%. A little bit of bid also in the Treasury market. Yields coming down just by about 1 basis point. This is Bloomberg.
Headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. In the pre-market, Walt Disney down about 5%. The world's biggest entertainment company reported subscribers for the Disney Plus streaming service were lower than expected, and a profit outlook for the year that also came up short of what analysts surveyed by Bloomberg were looking for. Apple shares up 1% of the pre-market. Apple's been developing a homegrown chip to run artificial intelligence, and that comes as to us from the Journal. And news this morning that Uber, Instacart, taking on DoorDash with restaurant deliveries. They're teaming up. And a little light on economic data this week, but we do have plenty of the Fed speak. Right now, the S&P futures up about a point. The Dow futures 15 points higher. The NASDAQ futures right now ahead of the cash open 33 points lower. 2-year yield unchanged. We're at 482. The 10-year is 2 basis points lower, and that's at 446. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
John Tucker, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Economic indicators today are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Let's check in with our next guest who's on the road. I mean, literally on the road there somewhere, I guess, in the greater Pittsburgh area. Deborah Cunningham. She is the CIO of Global Money Markets at Federated Hermes, our good friends out there in Pittsburgh. Deborah, Global Money Markets, I mean, you guys are now popular at the party, right? Because you can actually give investors a meaningful return. What are you seeing in the money market business these days?
You know, we continue to see inflows. They started back in 2022 when the Fed began raising rates. They continued in earnest, especially after some of the regional bank issues in March of 2023. And now that the Fed has been on hold for over 9 months, the flows continue. They took a little bit of a backward step during the March 15th corporate tax date. That's usually the largest of the 4 quarterly corporate tax dates. And that was the case this year. And then the April 15th personal tax date, you saw some outflows during those 2 time frames in the first and then the beginning of the second quarter. But that certainly, you know, still leaves the industry up on a positive basis year to date, and it continues to grow.
And the narrative for a while was like, at some point, that money is going to leave money market funds and it's going to belong to stocks or something else, et cetera, private credit, private equity, you name it. Are we learning that was fallacy? Do the money markets just get that fund, those funds?
Well, you know, I've been saying all along, the majority of these flows have been sticky, which means they are not leaving even when interest rates start to go down. I would say maybe 20% or so of what's in the industry assets are, you know, potentially prone to be moving elsewhere. But what has mostly come in, 80% of the flows have been retail, and the essential, you know, difference between retail and institutional flow is what their choices are. Retail flows from a cash basis, if they're not in money market funds, they are typically in deposits. And when you look at the yields on deposits these days, they are not keeping up with money market funds. And the likelihood once interest rates start to go down of them keeping up is even less. So I think those retail funds are staying right where they are and will continue to flow into money funds. The institutional side will likely start, they're generally their other cash alternative for traditional cash investments is the direct securities market. And they are still in that for the most part, but will likely, once interest rates start to go down. So once the Fed makes the first move, I think you'll start to see institutional flows come out. However, that will offset to some degree that what I'll call temporary cash that's in, or temporary, you know, assets that are in cash for safety purposes and, you know, sort of a safe harbor, looking for a safe harbor, waiting for their chance when they feel it's the appropriate time to get into the riskier asset classes, longer term fixed income or the equity market. So I don't think you're going to see really a downturn at all from a total assets under management within the liquidity sector.
Hey, Deborah, at Federated Hermes, in the global money market accounts, what do you guys actually buy? What type of securities do you buy in your money market accounts?
Sure. So about 2/3 of the industry is in government products, and those government money funds are buying traditionally treasury securities, treasury bills, treasury notes, treasury bonds, treasury floaters, government agencies. You know, the home loan banks are most prevalent, some Fannie, some Freddie, some various types of TVAs and other, you know, farm credit agencies, and then repo backed by those. So that's 2/3 of the industry. The other third of the industry is for the most part prime. Those types of products are generally buying commercial paper, bank CDs, also repo backed by government agencies and treasury securities, and also the treasury and agency side as well.
Bank CDs. I think it's like Citizens Bank in my neighborhood. It's like local area has a big old sign taped onto the wall, 5% CD.
Boom, hit that.
I mean, really. So to that point, is there a yield where you feel like things start to reverse? 3%? Is it the rate of decline? How do you look at that?
Well, I think what we saw during the 10 out of 12 years in a zero rate environment is that is not a good environment from a cash or liquidity perspective. People learn to bucket their cash so they can get out of the lowest zero yielding aspect of cash, except for what they need on an operational basis day to day. So clearly zero is a bound that's a problem. I think when you look at what the Fed's target is for inflation of 2%, and you add, let's say, the risk, allocation of maybe 100 basis points over that 3%, you're still in a yield environment at 3% that would not cause people too much angst or concern for having their cash in that 3% type of vehicle and having more of it rather than less of it. Once you get below 3%, I think that's probably where you start to enter the mode where, the typical investor, both institutional, not as much retail, but mostly institutional, will be looking for other alternatives, maybe micro short or ultra short, or some sort of a separate account type of cash vehicle.
So, Deborah, a lot of jawboning here about what our Federal Reserve is going to do and when they will do it. What are you seeing in your market? Is your market discounting a Fed rate cut? And if so, when?
Yes. I think from our perspective, we're looking for 2 cuts at the most in 2024, not starting until later this year, September, perhaps even November. If they start in September, maybe skipping the November meeting and doing December as well, or maybe just 1 cut in November or December. But that's a far cry from where we started the year, which we totally disagreed with from the market standpoint, when we had as many as 6.9 cuts built into the marketplace. That just seemed unreasonable given where we were from an economic situation standpoint, as well as an inflationary stance and an employment perspective. And that's really, I think, what's come home to, roost in the first half of 2024 is confirmation that was overzealous from a market expectation standpoint, and something that's more in the norm of 1 to 2 cuts is where the market makes sense at this point, given where we are on inflation.
Can you imagine getting 9 cuts right now? Oh my gosh, that would just be insane. The conversation about a week or 2 ago before the Fed was maybe we need to start talking about hikes. Maybe we can even start talking about it as background noise. It feels like Jay Powell last week definitely took that off the table. Is that accurate? Is that correct? Does that sort of put a top on money market funds?
I think he definitely took that off the table. If they were pushed into it with some continuing, inflationary data that proves to be too resilient from their standpoint, I think that it would take a lot to move off of the 5.25 to 5.5 to a higher rate. What I feel he was saying is it's not going higher. It's aggressive and tight the way it is. So that will continue to combat the inflationary aspects in the marketplace, which should hopefully then continue to provide confidence to the FOMC members that their next interest rate change will be to lower rates, not to increase them further.
All right, Deborah, thank you so much for joining us. Deborah Cunningham, she is the CIO, Global Money Markets, over there at Federated Hermes, talking about the short-term end of this market. With our news in New York City, here is Mr. Michael Barr.
Thank you very much, Paul. Alix, John, an attorney for Stormy Daniels, says the porn actor is expected to appear as a witness in Donald Trump's hush money trial today. Daniels' real name is Stephanie Clifford. Trump said earlier today that he was recently told who the witness would be and complained he should have been given more notice. As he left the courtroom yesterday, Trump called the trial schedule an election interference tactic to keep him off the campaign trail.
The other thing that maybe is even more disgraceful is the gag order, where I can't I have to watch every word I tell you people.
Judge Merchan warned Trump that any future violations of the gag order could result in jail time. Israeli troops took control of the Rafah border crossing in Gaza this morning, and Palestinian officials said all the aid flows from Egypt had stopped. Tanks drove through the area in the far south of the Gaza Strip, and soldiers replaced Palestinian flags with Israeli ones. President Biden will denounce anti-Semitism at college campus protests against Israel when he addresses an annual Holocaust commemoration on Capitol Hill later this morning. Bloomberg's Jody Schneider is in Washington with more.
This, of course, comes amid talks of a ceasefire, and President Biden, of course, being in this very difficult situation of continuing to support Israel, but making it clear that they want there to be a different situation in Gaza, that they want a ceasefire. And, on college campuses, this is the call. And this is a group, this younger, educated, college-educated group that Biden is going to need as in his reelection.
Bloomberg's Jody Schneider in the nation's capital. Last week, Biden spoke about the protests, saying students have the right to protest, but not to engage in violence. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, Michael Barr, thank you so much. We appreciate it. Piece of news here across the tape, Alex, getting my attention. Private equity firms circle Peloton for potential buyout. The stock is up 22% on that news. However, it is down, 40% year to date, 50% over trailing 12 months. Stock's at like $3.54 at close yesterday. I think it peaked at $160 back in the end of 2020 during that whole pandemic. Got to get a bike, got to exercise because everything's shut down.
Are you bidding? Are you that private equity firm?
I may or may not be involved in the bidding process here. We own a bike. We own a treadmill. My girlfriend is.
Oh, you own the treadmill?
Avid. Oh, yes.
Huh.
So the guest room is no longer the guest room. It is a Peloton room.
Was the treadmill thing different than like regular treadmills?
You're asking the wrong person. I'm just, But apparently the answer is yes.
Okay.
And so they're widely used in the household.
To some respect, having private equity come in is no surprise. When when earnings came out and they had to lay off more staff, that was what everyone was saying. I was like, look, this is like prime for private equity. It just depends kind of on what the price is for that and how you wind up growing subscription revenue. That's at the end of the day what you got to do. You got to grow the subs.
Yep, you got to grow the subs and get them to pay more and maybe try to monetize them in different ways, advertising, merch. I don't know how you do it, but that's kind of the nut there. So we'll see. Stock up 20% on the report here. We'll keep up with the reporting coming from our good friends at Bloomberg News. S&P 500 just up a fraction, up about 4 points. And NASDAQ down about 17 points here in pre-market trading. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After yesterday's 1% rally for the S&P 500, traders could be poised to take something of a breather today. Swaps traders, they're betting on a 45 basis points of Fed rate cuts by December. You guys touched on this just briefly. A report this morning on Peloton, CNBC, saying private equity firms have been circling for a potential buyout. Some of those discussions centering on how to cut the operating expenses to make a buyout more attractive before anything goes through. Of course, this comes after a poor earnings report last week. We also found out that CEO Barry McCarthy is stepping down, and 15% of the staff is being cut. Uber shares among the most active, up about 0.25%. Instacart partnering with Uber Technologies to offer restaurant delivery through the Instacart app. They would be taking on the food delivery app DoorDash, which is tops in the U.S. right now. Disney shares down over 5%. Subscribers for its Disney Plus streaming service were lower than analysts expected, and a profit outlook for the year also coming up short. And right now we have Dow futures 28 points higher. The S&P E-mini futures, they're up just about 5 points right now. And the NASDAQ futures, 12 points lower. As far as Treasury's 2-year yield, unchanged, 482. The 10-year is down 3 basis points. That is at 445. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex really wants me to take a look at some story about the Met Gala last night.
I am. I do want you.
I really could care less.
No, Tyla had like a Bauman dress on that was
First of
covered
all,
in
I don't even know
sand.
who Tyla is.
Well, neither do I. That's not the point. The point is that her entourage had to lift her up step by step. Lift her up.
That's a tight dress, right?
I mean, I think it's because it was also sort of made of sand. And then when asked if she could sit down, she's like, "Who cares, guys? I'm cute." Just click on the link, Tucker.
You
click on the
brought
link.
this up before, and I'll ask the same question. How do they go to the bathroom?
This is honestly something I think about a lot.
Okay.
Like, how do you do that in these big gala dresses? Do you take some kind of pill? Do you have like a little?
Is there a pill?
Is there to like make
there-
you not have
is
to go to
there
the
a pill
bathroom?
for that? Because I take it.
Is it like, do you have like a mini catheter? Like, 'cause, I don't know. I'm genuinely asking.
Oh.
This is the stuff I think about. I have to
Okay.
be honest with you.
This requires a separate story, a sidebar. We'll
It
call
does. And thank you for setting me up really nicely for the intro for this next segment. There is no nice segue to this one. So on geopolitical level here, Israeli forces took control of the Rafah border crossing in Gaza Tuesday morning ahead of a possible assault on the city. This is the first time Israel's army has entered that part of Gaza since the war with Hamas, an Iran-backed militant group, began in October. We want to break this down and understand this a little bit more with Roz Matheson. She is news director, EMEA, at Bloomberg News. Roz, how did we get to this point? And what were sort of the ceasefire talks about over the last few days, and where are they now?
Well, it's been building for quite some time because Israel's been consistent for many weeks now about their desire to go into Rafah, or that they feel they have to go into Rafah, because their ultimate goal here is to try and eradicate Hamas. And they say that there's quite a big pocket of Hamas fighters in the Rafah area. And so they're going to be compelled to do that, because for them, the overarching existential issue here is that they cannot see themselves in a position where they would be vulnerable again to an attack as happened back in October by Hamas. And that's been their goal throughout, despite these ceasefire talks going on, despite the pressure from the US and others to think about what an offensive into Rafah would look like, and certainly to bear in mind the large number of civilians who are in the area. So even as those talks have gone on, and Israel says they'll continue to take part in those talks, they don't subscribe to the outline of a deal that Hamas said that they would sign up to yesterday. There's a lot of disagreement still about some of the wording around that deal. So it's on a two-track really at the moment. Those talks are going on, but we are edging closer to a full offensive inside Rafah, and the clock is really running out on that one.
And Roz, it seems like, just as it relates to Rafah per se, this is something that's been telegraphed for weeks, actually. Why do you think Israel has held off? Is it such a major undertaking that they have to mass forces and resources, or is it more of a political question?
It's probably multiple factors in all of that. There is that political question. Of course, they're also trying to prioritize the return of the remaining Israeli hostages, and they can't do that if there's a full offensive going on in Rafah at the same time. They are probably taking a bit of heed from the US and other countries on that, just to tread carefully. They needed to rest and recycle some of their own troops. They need to bring them back around into Gaza, but also they need to think about the reality, and they are clearly thinking about this, that there's at least 1 million Palestinians that we know of in that area. And if you're putting a full fronted ground invasion in there, you need to think about where those people go, and you need to entice them in a way to leave. And that's what they're starting to do, is they're starting to say you need to go. But that's an ongoing process for them.
What does this mean for aid? From what I understand, then the aid trucks can't get through, is that right?
Well, the Hamas and Arab media are saying that there's no aid now able to come in through that crossing in particular. We also know that there's very few other avenues for aid to get in to Gaza. Israel is saying that there are other avenues and that it is still coming. I mean, either way, the aid that was getting in is pretty small, even when the trucks were coming in each day. It's aid agencies say it's not enough to help with the catastrophic humanitarian situation there, and it's always fallen short. So it has been some aid. It's unclear exactly how much might still get in with that crossing shut. We're waiting to hear more from Israel on that front, but they do say that there are other avenues for some aid at least to still get in.
Roz, Hamas has said that it has accepted the Qatari Egyptian ceasefire proposal. What do we know about Israel's view of that? How close are we to something perhaps getting done?
They still seem to be disagreeing on some of the words in an agreement. And it's very delicate and fragile, that wording, because for Hamas, the idea is that a ceasefire is a springboard to a permanent end to the conflict, a way to end the fighting entirely. For Israel, they want the ability to continue the war. They don't want to be boxed in with a ceasefire basically being that avenue to the end of the war. So they want language that is open-ended about that. And that's where the fundamental disagreement is what kind of words can you use that suggest this could be a springboard to the end of the war without compelling it to be the springboard to the end of the war. So we're really hung up on small amounts of wording at this point, but they are seen as very fundamental by either side, and that's why we're seeing things really not move much forward, although we do know that Israel has said they will send delegations to further talks, but at this point they just seem many, many miles apart.
Before we let you go, we spent a lot of time talking about the protests on college campuses here. How is that being reflected over there?
Well, we've seen protests in other parts of the world. We've certainly seen some today in Germany alone. There was a small gathering of several dozen pro-Palestinian protesters at a university in Berlin. We know the police have come in there to move those protesters on. So we are seeing it at other campuses around the world, but certainly not to the extent that we have in the US. And it's really, in a way, feeding into that political moment in the US in the run-up to the election as well. It's obviously a key question on the minds of young people, potential voters, and it's something that's really resonating on campuses there. We are seeing those protests, as I said, and those rallies in Europe and elsewhere, but they are for now much smaller in nature.
Roz, what do we know about the support within Israel for Mr. Netanyahu from the populace? Is it the support for him, the support for the effort in Gaza still there?
It's an interesting question, because how much is the support directly for him and his leadership as a politician, or is it for what Israel is doing or what he says Israel needs to do? You've seen that hardening of support around the idea that Israel needs to stand up for itself against Hamas, that it needs to move continue to move against Hamas to try and eradicate it. That's a fundamental support you see across society in Israel. Is that direct support for Netanyahu and his particular leadership? That's unclear, and his own political future, that's probably still very much up in the air. But in terms of what Israel, the country, is doing under his leadership against Hamas, there's widespread support for that war.
All right, Roz, thanks a lot. We really appreciate it. Thank you very much. No one better to talk to here at Bloomberg. Roz Matheson, a news director for EMEA with Bloomberg News. So that's sort of the backdrop here, Paul. We're also looking at a market that's a little bit mixed when it comes to the futures market. The S&P future is up by about 4 points, but you have a little bit of a bid into the bond market as well. You know what we haven't talked about?
What?
Apple.
Yes.
It's like Apple iPad Day. That's supposed to be a thing. Like, do we care?
I still have my iPad. It's on its very last legs. Wow. This was like original version of the iPad.
No
but
way.
I find I use it almost Almost none. I mean, because my phone's, everything's on the phone. I do my whole life on the phone.
And if you have a bigger phone, I mean, I don't mind having a small screen to watch stuff, but it doesn't really move the needle to want to buy an iPad.
John Tucker with the flip phone, you probably
do need the iPad.
Probably.
Although he probably has a television set with the bunny ears.
He does, but okay.
So,
and you have to get up and turn the channels.
Right, for sure.
Other than that, it's all good. We'll have more coming up. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, in the 9 o'clock hour, Alex, you tend to get more people in studio because they're up and about. They've made their commute in. So coming up here, we're going to have Scott Lander, CIO of Horizon Investments. He's going to be in studio. Barry Ritholtz, host of Masters in Business on Bloomberg Radio. He's going to be in studio, so we're going to have some fun people coming in. David Gura, host of the Bloomberg Big Take podcast, he should be in studio. So, I mean, we'll see how this all plays out. But we got a lot coming up in the 9 o'clock hour. We got Disney down 8%, have no idea what's going on there. And I covered Disney stock for 35 years, so go figure. But we'll figure that out in the next hour or so. Right now, let's kick it all off here with Mr. John Tucker and get a Bloomberg Business Flash, John.
All right, thanks a lot, Paul. And to Alex, right now, futures indicate a mixed open on Wall Street. You have the Dow futures up 35 points. S&P E-mini futures after yesterday's 1% pop, right now 6 points higher. And the Nasdaq futures, they're lower, down about 5 points. In the pre-market, Peloton Interactive shares spiking after CNBC reported a number of private equity firms have been considering a buyout of the fitness company. Company reportedly holding talks with at least one firm in recent months as it considers going private. At Disney shares, as you mentioned, they are among the most active in the pre-market. They're actually having the conference call right now, down 8%, profit beating estimates, revenue falling short, overall Disney Plus subscribers coming in lower than expected. Tesla facing a July 1st deadline to furnish regulators with information about its biggest ever recall. In advance of that, shares of Tesla, they were also lower. And shares of DoorDash, they are falling pre-market right now, down 2.2%. This comes after news this morning. Instacart partnering with Uber Technologies to offer restaurant delivery through the Instacart app. This week kind of light on the economic reports, but a lot of Fed speak. A 2-year yield right now, 1 basis point lower. That's at 481. The 10-year, the benchmark is down 4 basis points. We're at 444. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, JT, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. Bloomberg Surveillance today is brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Opryland Hotel, 2 words, water park. Big.
Other
Get
2
ready
words, Paul and I are going to be there.
Oh, yeah.
When are we going?
Oh, we are going June the 4th to 6th.
Yeah.
When are we going? Because I've never been there, and I'm very excited.
I've never been there either. I think there was an article, actually, in the Journal the other weekend about how Nashville has transformed itself so quickly that people who've lived there for a while are getting priced out. It's a really interesting town.
Yeah, so we got the water park. We got Cracker Barrel for breakfast, for the Country
I've never
Boy
been
breakfast.
to a Cracker Barrel.
Are you trying to tell me I'm not going?
Oh, this is awkward. I feel weird now.
Oh, that's
you
a problem.
You should talk to our boss.
Yeah, we'll have to talk to somebody. All right, let's see where this economy's going here. Francis Donald's going to help us out with that, Chief Economist at Manulife Investment Management. Francis, thanks so much for joining us here. I'm not really sure where the market is here in terms of this Federal Reserve. For a while there, we started out with a lot of rate cuts factored into the market, then fewer and fewer and fewer, and then there was even talk of a rate hike maybe. That seems to be off the table here. I'd love to get a sense of how you folks at Manulife are thinking about our Federal Reserve and kind of how they're thinking about this economy.
You mentioned 2 words earlier. We have 2 words too. Fed cuts are going to come later, but then much faster than this market has been pricing in. Now, we've already been seeing that later to a certain extent, and that's just simply because we do expect the labor market in particular to decline. We do expect inflation to decline, but we have a few more months before the data will give the Fed permission to begin this easing cycle. What we haven't bought into is that this would be like a 2 or 3 year done situation, that these would be insurance cuts. We believe we are heading into a proper downturn that will require a proper easing cycle. And frankly, that call, is this just, some insurance cuts on the margin, or are we going to see a average historical easing cycle, is far more important than do they go in June, September, or even December in our view.
So your 2 words are later and faster, basically. What gives you the confidence that we will see a material downturn?
Leading economic indicators. So just about everything in the labor market that explains where we are in the labor cycle is pointing to a deterioration. And we're not calling for the end of the world. We're not saying it's a big crisis. We're calling for 2 quarters of negative GDP. Q3 and Q4. Could be Q4 and Q1. We'll know as we get closer to it. We've got, business employment development data, 9 million companies telling us there were job losses last year. Household employment has been flat. Temporary employment, really good leading indicator, flashing recessions. Average weekly hours worked in the economy. Just how many hours are people working? That's back to pre-COVID levels. Quit rates are dropping. Surveys from PMIs to small businesses say we're just not hiring as much anymore. I mean, I tell my team, we've been calling for a recession for a while. It's been later than we expected, but I say every day, come into work, look at the data, and just ignore your past call. What does it tell you? It tells you we're late cycle, and the odds of a downturn are much higher than the odds of a reacceleration from this point.
Well, we're hearing a similar kind of commentary coming out of the Walt. Thank you very much, Ken. We're hearing a similar type of commentary coming out of the Walt Disney Company. I'm reading the research React from Bloomberg Intelligence, Geetha Ranganathan. Disney commentary on a normalization of demand at the theme parks will weigh on sentiment even after the segment posted a solid 12% operating income in fiscal Q2. Guidance for the parks in Q3 is weak with no growth, suggesting full-year estimates might be at risk. So there's an example, Francis, of a data point suggesting maybe the consumer's strength is kind of waning here. Is that where you think you might see it from the consumer, per se?
You're likely to see it across businesses and consumers because that's how rate hikes work. The average time between the first rate hike and its impact on businesses and consumers is 2 years. So we're not exiting the period in which rate hikes become really impactful in the economy. We're entering that period. The mistake wasn't thinking that we'd see the impact earlier because of how fast and intense the rate hikes came. We're just entering that period. This is old-fashioned economics. When money costs more to borrow, you borrow less of it and you invest less of it. Consumers can borrow less, they can spend less. Now, I will say there's a really important component here, which is that we are seeing a big bifurcation amongst both businesses and consumers. The spread between CEO confidence and small business confidence, largest that we've seen in this data history. And for consumers, high-income consumers, they feel everything is fine. Why? Because they're benefiting from higher rates and a good stock market. Low-income consumers telling a different story. So I love a good quality stock picker, even as a macro strategist in this type of environment. It's going to be a little bit trickier than just looking at the aggregate. There are some elements underneath the surface that are telling slightly different stories.
Well, I think that's such an interesting point, too, especially because the high-income consumers also have those low mortgage rates, right? So they're also benefiting from that. Lower-end consumers may not be owners at all. So I guess my question is, and this is where it kind of ties to Disney also, is this a real retrenchment or just we had so much spending, we had so much, say, theme park attendance, if we use Disney as the example, and we're just moving off that high level? Is there a distinction to be made?
So I love this question. Are we just heading towards a normalization is effectively what I think about. If you look at the year-over-year charts, most of them signal this is a really strong contraction. Things like the SAM rule or a lot of things showing the unemployment rate is 10% higher. Does that work when we've just come off of really low bases or really high highs? I'm a second derivative gal. I gotta say, most of the time, momentum in year over year is the powerful indicator, but there is a chance that we're simply normalizing down to regular levels. And this is why we're not calling for a huge crisis. We're just saying that your GDP can be negative for 2 consecutive quarters, and the Fed may want to begin an easing cycle in response to it. But this is a post-COVID, completely no precedent type of economy. And so I think there's a fraction of this that has to be old-fashioned economics and what are standard relationships, and then we have to overlay the more subjective, what could be different this time. You need a little bit of that science, a little bit of that art.
Francis, what do you think about the labor market here? Again, it seems to have been so resilient for so long here. Are you concerned that there may be some cracks in this labor market, or do you think this economy can continue to support maybe a sub 4% unemployment rate?
We're pretty close to 4. We'd have to stay at 3.9% now through the rest of the year, which seems a little tricky. So I think, again, you have some old-fashioned components here. If you look at temporary employment, average weekly quit rates, hiring rates, even conference board confidence data on jobs hard to find minus plentiful, check the service employment index under the services PMI. That's deteriorated to levels that we've only really seen in really serious recessions. These are not signaling that the employment is going to get better. They're signaling a further deterioration. At the same time, we have a very pronounced labor shortage.
Yep.
We are in an environment where businesses, it was a heck of a hard time to hire people in the past few years. They've said, if it's only a short-term recession, we're going to hold on as long as possible. So I think you have a mix of, yes, things are going to get worse. Are they going to be a really standard massive deterioration? I don't think so. You got to overlay that structural post-COVID economy as well.
Francis, thank you so much for joining us. Again, we always appreciate getting your thoughts and commentary. Francis Donald, Chief Economist at Manulife Investment Management. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alix, John, an attorney for Stormy Daniels says the porn actor is expected to appear as a witness today in Donald Trump's hush money trial. Trump said earlier today that he was recently told who the witness would be and complained that he should have been given more notice. Yesterday, Judge Merchan warned Trump that any future violations of the gag order could result in jail time. Trump criticized the gag order and hinted he would serve the jail time as a sacrifice for the Constitution.
This judge has given me a gag order and said you'll go to jail if you violate it. And frankly, you know what? Our Constitution is much more important than jail. It's not even close. I'll do that sacrifice any day.
In the final weeks of Trump's 2016 Republican presidential campaign, Trump's then lawyer Michael Cohen paid Daniels $130,000 to keep quiet about what she says was an unexpected sexual encounter with Trump at a celebrity golf outing in Lake Tahoe in July of 2006. Trump denies having sex with Daniels. An Israeli tank brigade has seized control of the Gaza Strip side of the Rafah border crossing with Egypt today. Meanwhile, Hamas said yesterday it accepted an Egyptian-Qatari-mediated ceasefire proposal. Israel insisted the deal did not meet its core demands. After a nearly 2-hour meeting with House Speaker Mike Johnson, Republican Congresswoman Marjorie Taylor Greene says she plans to meet with him again today. Greene will be joined by fellow Republican Representative Thomas Massey. The two have threatened to oust the Speaker, but the motion to vacate hasn't gained much support among their colleagues. Greene speaking to reporters after yesterday's meeting.
So I just had a long discussion with the Speaker in his office about ways to move forward for a Republican-controlled House of Representatives.
When pressed on whether she still plans to move forward with her motion to vacate, Representative Greene said, "We'll have more information after today." Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alix, John.
All right, Michael Barr, thank you so much. Alix, you know, Disney company, the company's really transformed itself really into a theme park business with some media stuff around it. 70%, 70 of its operating income comes from the theme park business. So when they say that their theme park business is slowing back to a more normalized level, that's what's bringing the stock down. That's what appears to be the case. Because I didn't know why the stock was trading down before, but now we're getting some more color from their conference call.
Well, that's so interesting, too, because moderating is different than, like, materially slowing, right? But still, to your point, 70% of operating income is definitely no joke. Also, Neil Kashkari, Minneapolis Fed president, writing in an essay, questioned the policy restrictiveness given inflation data. That's quite interesting. We'll discuss with Scott Lander, CIO at Horizon, coming up next.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Traders may be taking something of a pause after yesterday's 1% rally for the S&P 500. Peloton, the interactive shares spiking in the pre-market trading. CNBC reported a number of private equity firms have been considering a buyout of the company. And Walt Disney shares, they're also tumbling after the world's biggest entertainment company reported subscribers for Disney Plus. They were lower than expectations. Also, the profit outlook for the year is also coming up short. Right now, we have Dow futures 58 points higher, up about 0.2%. The S&P E-mini futures, they are 8 points higher. That's up about 0.2%. And the NASDAQ futures, they are unchanged right now. As we look at treasuries, not a lot of economic data this week, but we do have a number of Fed speakers. The 2-year yield, right now 1 basis point lower, 481. The 10-year, 4 basis points lower, that's at 444. And we also have a treasury auction today to keep track of. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alix and Paul.
All right, John Tucker, thank you so much. We appreciate it. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so head over to youtube.com. Search Bloomberg Podcast. Alix, you're probably aware we have a strict no UNC Chapel Hill policy here in the Bloomberg Interactive Broker Studio.
I did not know that.
But somehow our next guest breached those defenses, so we're going to have to deal with that.
Is that because you're a Duke guy or something?
Yeah, but it's okay.
Tough stuff.
We'll have to figure out what happened there. We'll have to review our policies here. Scott Ladner joins us.
Just blame Rich.
Scott Ladner joins us, CIO of Horizon Investments. Scott, I mean, we've got we've got an equity market that's had such a nice rally off of those October lows. I guess there's some earnings upside. I guess there's the Fed pivot. Where do we go from here, do you think, given the background of earnings, given the background of a Fed that likely will be dovish, but maybe not as much as we initially thought?
Yeah, look, I mean, I think it's unlikely you get something really bad to happen, because the only time you get something really bad to happen is if you have earnings that are going poorly and or rates that are going higher. Like, earnings are going pretty well. Like, we're going to get 10 to 15% earnings growth this year. You don't get bad markets when that's happening. And, like you guys have been talking about all morning long, Powell's, he took rate hikes off the table. Like, I mean, he tried to in October and November, and he basically had to reiterate himself, last week, and he did a pretty good job of it. It's like, they're done.
So I'm looking through your notes, and you say something that Francis Donald also said earlier, the bifurcation, right? Large versus small business confidence, for example, high income versus low income consumer. So if we're seeing a bifurcation in the economy and in confidence levels and the soft indicators, how do you see that bifurcation in the market?
So, and we have seen it so far. I mean, small caps outside of that, the kind of the November to December rally that was spurred by.
They keep trying. Small caps keep trying.
They keep trying. Bless their heart. But they and they will catch a bid. Like, they will catch a bid when the market really actually believes that the Fed is done, and when we can get rates a little bit lower. Small caps got creamed because they are exposed to high rates. Like, they're the only part of the market that is really exposed to high rates, and because they have floating rate loans, because they're more levered, because they're not as profitable, because they don't have the kind of scale, and they're not really AI engines like the big med cap guys are. So the rate trade is really the small cap trade, and so when we get a little bit more certainty, and I think we're about on the doorstep of getting it, that's when we're going to get the small cap rally going again, because there are some good companies in there.
Scott, I'm going to throw a bone to my buddy here, Alix Steel. Energy is one of the sectors you like. Why?
Because we are, look, I can't believe I'm going to say this, but China might actually get it right eventually. Are they getting scared? Are they getting scared enough to actually be able to do something on the fiscal side, to be able to do something on the stimulus side that's going to be meaningful? If they are, and we are getting a global economy that. Look, I couldn't disagree more with Francis about the recession call. We have not been in a business cycle. That's why we have not gotten a recession. But the upside to the economy, to the global economy, that could be spurred on with some China news if we get some good news out of, could we actually get good geopolitical news? Could the Russia-Ukraine war end? Could we get good news out of China?
Yeah.
Those are some positive catalysts, we think, on the energy trade that could be.
The energy trade is aside from the geopolitical risk, that is a global growth demand story.
Absolutely.
Interesting, because usually we wind up talking about energy and power, for example, and I realize that power companies, energy companies are different, but that it is an AI grid demand power story. Do you see that playing into it at all?
I think that's a bit of a tailwind. That could help. It's not going to hurt, right? I mean, like that part is not going to hurt.
But that's not why you're interested.
That is not why we're interested. Yeah, we're definitely more interested on the global demand side.
Interesting.
Tech communications, is that is it tech like Apple, all those kind of big names, or is there something a little bit different here? Because a lot of people are still playing that AI trade very well, and why get off the train, I guess?
That's and you know, like it's kind of boring to talk about because that's what everybody's talking about, but it's also the right trade. So just because it's boring and everybody else is doing it doesn't necessarily mean it's the wrong trade. It'll be more bumpy, but this, you know, this is the same thing we got in the PC and internet revolution in the mid '90s. That took years to play out, and it was the right way to be. And so we think we're probably going to be moving from the picks and shovels part of this trade that we've been in for the last year and a half to, hey, what companies are actually using AI to improve productivity? Like that's probably going to be the next leg. We think about probably a lot of healthcare companies, a lot of pharma companies, a lot of industrial companies, maybe even in terms of logistics processes. But that next leg, I think, is going to be the more interesting part of this. It will still be the big tech guys. You still need to have those. But the use case of it is going to be, I think, probably the next part of it.
How long do you think it's the right trade for?
So probably at least for another couple of years.
Okay.
Again, we don't know. The only good analog that I've got is the mid '90s and the PC internet revolution, in terms of generating massive productivity gains and just really, it is the start of U.S. exceptionalism basically. We're going to have to see how these play out over the next year or two in terms of overvaluations, because we are going to get periods of overvaluation. The scary part of being in this trade is everybody knows it, everybody gets it, and there are going to be periods of time that the Nvidias of the world, the semis of the world are going to be too expensive to play. So you can either try to get cute with it and time those things a little bit, or just know you're in for probably a little bit more of a bumpy road than we've had over the last 12 months.
One of the concerns out there in the marketplace, just in general for the economy, and maybe for banks in particular, regional banks in particular, and you're in Charlotte, which is one of the banking capitals of the world, is real estate. So what are you and your folks down there in Charlotte and the banks, what do they think about real estate and as either a risk or an opportunity? Where are you guys with real estate?
So it is, real estate is quite local, as I know you guys know. It's in Charlotte or in some of the basically southeastern cities, it's pretty good. Yep. Outside of the thing that everybody knows is a disaster, which is the office towers. They can't figure out how to convert. But outside of central business district office tower space, it's pretty good. Now I don't understand some of the cap rates that are going on right now. I still get pitched deals at 5% cap rates with 10-year Treasury at 4.5. That makes
that makes sense.
It doesn't. It makes none. 0 sense to me at all. But
what
I don't
should
think
that cap rate be?
Probably 7.
Okay.
Can you pay me a little bit of money for tying my money up and having a completely liquid investment for 10 years? That it should come with some premium, but those are still getting shown around. They're not really trading very much, but that market is a little bit locked right now. But we still got a couple of years where people can extend and pretend to some extent and wait for rates to come down a little bit, and then the financing part will get interesting.
What do you think that, for just quickly on that point, why haven't we seen the total fallout yet of commercial real estate? What's preventing that?
Yeah, it's in nobody's best interest for it to happen.
Because a bunch of banks don't want to own all these places. Okay,
you got it. Yeah, so that so long as they can do the extension parts, they'll do that basically as long as they can.
Real quick, 30 seconds. How's the Charlotte economy? How's life down there?
It is booming. It is. There are more people moving in than there are moving out. So housing is quite tight, and schools are full, and they're building more of them all the time. But it is definitely booming right now.
Charlotte Motor Speedway. Mm-hmm. Did a lot of business there back in the day, lending money to them, taking them public. Mm-hmm. We went out and bought a bunch of racetracks, built a bunch. We took that speedway from 100,000 seats to 250,000 seats.
Bruton's a smart guy.
Yeah, Bruton Smith is good. Humpy Wheeler, how about that name?
That's good.
They love me down there in North Carolina.
Well, Scott, we should go.
We should go. Again, add it to our list of places that we can go and John Tucker can. Scott Ladner, thanks very much. CIO Horizon Investments, joining us here in our Bloomberg Interactive Broker Studio. Looking at these markets, we're going to get them open for you in just moments. Futures, slight lift, just fractionally here on the equity futures. Yields come in just slightly. The 10-year Treasury is off about 4 basis points, 4.44% on the 2-year. Remember, we were close to 5%. We're at 4.81%. And for Alex, I will call out WTI crude oil off just slightly. just above $78 per barrel. And BitDog is up just fractionally, 63,400 for Tom Keene. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash as we head to the cash open on Wall Street this morning. Futures all morning long, they have been mixed. And there you have it, the opening bell at the New York Stock Exchange. And we did get earnings this morning ahead of the opening bell. Walt Disney shares, they're among the movers. The biggest entertainment company in the U.S. reporting subscribers for Disney Plus streaming service lower than expected, and profit outlook for the year that also came up short. And right now, first trades, we have Disney shares down about 8.1%. DoorDash shares, they are also lower right now, down about 4% after the news that Instacart partnering with Uber Technologies to offer restaurant delivery through the Instacart app. And Peloton Interactive shares, they're up right now 15% after CNBC reported that a number of private equity firms have been considering a buyout of the company. Dow Jones Industrial Average right now 20 points higher. We're 38,874. The S&P 500 up just 8 points after yesterday's 1% pop. And the NASDAQ Composite Index right now up 8%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's the opening bell report. Alix and Paul.
All right, very good. John Tucker, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well, so check us out there. 1B Ritholtz joins us here. Barry Ritholtz, host of Masters in Business on Bloomberg Radio. I think he has a day job, something they say, Chairman and Chief Investment Officer, Ritholtz Wealth Management. So he's got that going for us. Should the Fed already be cutting rates? Hasn't the data been like, we've got inflation, not whipped, but we've got it under control? Shouldn't they already be cutting rates?
So short answer, yes. Longer answer is, let's look at two things. First, generally speaking, the Federal Reserve has this disconcerting tendency to always be behind the curve, right? Look at the 2010s. They were on emergency footing the entire decade practically.
That was nice.
Right. Right. If you bought things priced in either dollars or credit, it was fantastic. If you were on the other end of the wealth scale, not so much. Although your Visa cards were relatively, your credit cards were relatively inexpensive. Yep. Fast forward to the pandemic. You had the biggest fiscal stimulus since World War II at 10% of GDP. The Fed seemed to be late to recognize inflation going through their 2% target. They were late to recognize it peaked in June 2022. And for the better part of a year, they've been late to recognize that, as you said, inflation has been defeated. Specifically, the big problem we keep running into is shelter. And shelter is wildly distorting the way the Federal Reserve thinks about inflation, in part because of the way BLS measures shelter inflation. I'm not saying it's fabricated. George Box famously said, all models are wrong, but some are useful. It's a useful but kind of misleading measure of shelter, in part because renewals are 2/3 or more of rental agreements. Very few are new. And when think about, if you are seeing your lease renewed, either you're renting an apartment or a house, you negotiated that 2 years ago in March 2022 or May 2022. That was just about the peak of inflation. So this contract signed 2 years ago, what does that have to do with the Fed's rate today? Nothing. And yet, when you look at a chart of real time, either the Zillow index or the apartment listing index, they're flat to negative. Zillow is slightly positive, apartment list is slightly negative. So if that's the case, why are we so hung up on BLS inflation measures of shelter when we know they lag by 8, 10, 12 months?
These are all excellent questions. I have a question for you.
Sure.
Are you part of the private equity team that's looking at Peloton?
I am not. I am not. It's funny because I love the way these news stories break. Every company that peaked in the pandemic era and has dropped 40, 60, 80% has private equity sniffing around. There are people who their day job is to say, this was a multi-billion-dollar company, and look at it now. The revenues are still pretty good, but the valuation is a quarter of what it was. Maybe we can make some money taking
Are you a
it private.
Peloton user?
No.
No.
I think that's self-evident, isn't it? I tried to talk my wife into it, and she's like, it'll just be another place to hang clothes. So why do we want to do that?
I appreciate that response.
I like the hydro rower. I've been using that. And that's
What's a hydro rower?
So it's like a Peloton, but for rowing, and it's just a very modern looking piece of technology. The big old screen in the front and very controllable things, but you can participate in races. They have people who, it's the same concept of you find somebody who you like and you go out on the Charles River with them from your basement.
On wherever you are.
And it's hard to hang clothes on that.
Yes.
It's much harder.
Rower, so
that's the advantage of a rower.
Yeah, understood.
You mentioned like private equity. There's all we kind of read about is there's so much money out there in private equity. These guys aren't doing deals. I'm not seeing deals getting announced.
Well,
all these private equity guys.
They kind of shot their bolt in the 2020s, and some private equity people overpaid for a lot of, and you saw some of this in the venture side. And so the private pricing slowly comes back down to earth. You know, there are certain things where, and this goes back to the financial crisis with mark to market. If you don't have a real-time print, well, you could kind of take your time in saying, hey, we're going to appraise it at this. And
well, that's my thing about the endowments. When the markets got crushed in 2022, and I said, I can't wait to see what the endowments report in 23 about their fiscal 22. No blow-ups, not one. And I'm like, wait a minute,
How does that happen?
40% in private equity, you didn't take a markdown?
You know, I've been in rooms where consultants are making the pitch, and the very sotto voce, you know, below the radar is, and by the way, when the market gets shellacked, hey, you don't have to update these for years.
That's always what's said.
Right.
Yes.
It's how much do you want it to be worth? It's that sort of thing. The problem you run into is, it's not just that there's a little bit of capital out there. People, every time I hear people talk about the United States going broke or we have these deficits, there is just endless fire hose of capital waiting to be put to work, whether it's money market funds or fixed income otherwise, or equities. And when rates were zero, private equity was able to generate a nice return on yield. The problem on cash when yield was practically zero. Now it's a lot more competitive, both from equity perspective and fixed income, and there are a lot of people chasing only so many deals. So at a certain point, they get pricey, like they did, and now there's a little bit of an aftermath. You need deep pockets and a lot of patience and survivability to win in that space, because it's talk about long game. It's a very long game with 5, 7, and 10-year lockups.
But that's always the question, because when you talk to anyone in private equity or private credit, they're like, oh yeah, no, things are going to get really, really bad, but not here, because we have a lockup period of 10 years, so we're good. But there's gonna be a big distress cycle. I don't get how both of those things can be true.
Well, they can be true if, all right, we fully backed up the truck in 2020 when everything was really cheap. But then by 22, things got expensive, and so we're just staying with our vintage 2020, and we're going to start a fund in 25 when things really hit the fan and become distressed. Very few people do that well. I think of Howard Marks and Oaktree.
Yep.
In the financial crisis, before it began, said, hey, we want to raise a $5 billion or $3 billion fund to invest in what we know is going to be distressed fixed income in a year. And I think they raised like quadruple what they were looking for, and then just shot out the lights. Because anytime you're buying, there's no such thing as toxic investments. There are toxic assets. There are only toxic prices. Any piece of junk priced low enough has upside, and that's what the distressed asset buyers have figured out.
All right, your podcast, Masters in Business. Who do you have?
Jim O'Shaughnessy, formerly of O'Shaughnessy Asset Management, sold to Franklin Templeton for some ungodly amount of money a few years ago, now runs O'Shaughnessy Ventures. What a fascinating guy. He has decided that, all these TikTok influencers and YouTube influencers, we're going too much for the clickbait, salacious stuff. There are these great creators out there that are kind of overlooked. I want to invest in those people. And he's been finding these amazing folks.
That's one of the questions I have, 20 seconds left. I don't know the economic model of all these influencers. Is it real? Did they make
For
money?
the top, like everything else, it's a winner-take-all model for the top 5%. Mr. Beast is crushing it. His videos get billions of streams.
And
so for a lot of other people, not so much.
That with advertising or?
It's all advertising.
Sponsors?
It's YouTube. It's either sponsored. Last week I had John Bradford, who sold honey to PayPal for $4 billion. One of her very first advertisers, I think her very first advertiser, was Mr. Beast, and his videos just get crazy views.
All right, and that's a whole. I can't wait to see something written about that, because I'm wondering what the economics are of that. I'm hearing crazy numbers out there from some of these TikTok and Instagram Reels people. Barry Ritholtz, thanks so much for joining us. Barry Ritholtz, he's host of Masters in Business on Bloomberg Radio. He's also chairman and chief investment officer of Ritholtz Wealth Management. Appreciate getting him here in our studio. With our news in our studio is Michael Barr.
Thank you very much, Paul, Alex, and John. An attorney for Stormy Daniels says the porn actor is expected to appear today as a witness in Donald Trump's hush money trial. Trump said earlier today that he was recently told who the witness would be and complained he should have been given more notice. As he left the courtroom yesterday, Trump called the trial schedule an election interference tactic to keep him off the campaign trail.
The other thing that maybe is even more disgraceful is the gag order, where I can't I have to watch every word I tell you people.
Judge Merchan warned Trump that any future violations of the gag order could result in jail time. An American soldier has been arrested in Russia. Staff Sergeant Gordon Black is being held for criminal misconduct. The 34-year-old soldier was stationed in South Korea but was on temporary leave. During that time, his family says Black went to visit a girlfriend in southeast Russia. Russian TV reports the charges against Black involve beating a woman and stealing from her. Black's mother, Melody Jones, describes the couple's relationship as volatile.
I knew something was going to happen. I felt like he was being set up by her.
Black was prepared to change units and move to Texas when he was arrested. A new report shows Social Security and Medicare are solvent for about 10 more years. Bloomberg's Amy Morris reports from Washington.
The Treasury Department report shows Medicare's Hospital Insurance Trust Fund will be able to pay full benefits until 2036, 5 years later than projected. But then after that, unless Congress intervenes, the fund will only be able to cover about 89% of benefits. Social Security can fully pay scheduled benefits until 2033. But after that, without help from Congress, Social Security will only be able to pay about 79% of benefits. The report explains that the coming deficit will trigger a Medicare funding warning requiring the president to submit legislation to Congress. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, John.
All right, Michael Barr, thank you so much. We appreciate that. Alex, I'm just looking at a red headline across a Bloomberg terminal. This is a Reuters report. Suzano approaches International Paper with $42 per share offer in the paper business. So potential M&A in the paper business. Suzano stock is up about 7% here on the name. That's a big company, $78 billion. I guess that's real. Brazilian real.
It's a Brazilian company, right? It's a paper pulp company.
Exactly. So
true?
International Paper, that stock is up 7.6%, 52-week high. So potentially a little consolidation in the paper business.
Yeah, interesting. I mean, deals. I think all the bankers, anyone will take deals where they can get them, that's for sure. And we've been talking about Peloton. CNBC reporting that private equity is circling Peloton right now for a potential buyout. And we're taking a look at the markets here where, nothing is happening in the equity market. So don't even worry about that. The S&P is up by about 0.1%. We're also looking, though, at a strong bid into the bond market. A 10-year yield down by about 4 basis points as we open you up on this Tuesday.
Now we'll look at some.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You have Treasury yields lower right now. That seems good enough ammunition to keep stocks higher. After yesterday's 1% jump higher for the S&P 500, the index continues its march higher. The S&P 500 right now up 0.2%, rise of about 9 points. We're at 5189 on the index. 8 of the 11 major industry groups in the index up right now. Materials, real estate, consumer staples, the best performers. Worst performing groups belongs to consumer discretionary. And yes, that is home to Tesla. Those shares down about 2.6%. You had data from China's Passenger Car Association showing shipments from its Shanghai factory dropping 18% year on year in April. Walt Disney shares down 8%, reporting subscribers for Disney Plus. They were lower than expected. Profit outlook for the year also coming up short. And then you have the most active right now, Palantir Technology shares. They are down 13%. The market unimpressed by the company's outlook for annual sales. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, JT, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene today. We're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Well, about 4 years ago, maybe give or take a day, David Gurr started posting these videos to social media of him fiddling. Like bluegrass tunes, I think. But man, were they good. I thought
there was some question about what he was playing.
I thought he had little to no talent just based upon my interactions with him.
Wasn't symphonic.
But he is really, really good. So if you want to see some great tunes, check out on social media, YouTube, all that kind of stuff. David Gurr, host of the Big Take podcast for Bloomberg News. He does have a day job.
Yes.
But so explain to me what these videos, what kind of tunage were you playing?
Well, it was 4 years ago, and I grew up playing old-time fiddle, which is like the precursor to bluegrass. My dad plays the banjo, and I grew up in North Carolina. So in that initial stage of boredom and freaking out, I picked it up again. After not playing it for a while, I've got young kids, so I hadn't been playing much, and it was a nice, I guess you could say, retreat to go up to the roof to play.
And it was great for us. I mean,
That's
just
so
a great,
cool.
just kind of a little bit of couple of minutes of fun in that
every Tuesday
time.
For a time. I don't know when I stopped, but eventually I
but
exhausted the
there
repertoire.
Was adult beverage.
There always was. There had to be. That was of the time.
COVID,
you know,
so
we had
clearly.
to. Yes, yeah, they were readily
do your
available.
Kids play now?
My daughter and son both play violin, so no fiddling yet, but they're learning.
So when do you make the changeover from I'm taking violin lessons from Mrs. blah blah blah
Yeah.
to like I'm gonna go fiddle with it?
I always heard bluegrass an old time around the house, so like once I developed the skills to play the violin, my ear was pretty good and I could pick up what my dad and his friends were playing. So around like 8 or 9, I started playing. Then we would go to these fiddlers conventions all across the South, which is a pretty wild summer. But anyway, that was a lot of like jamming and picking up music by ear.
What would you do with these fiddler kids? A little 9-year-old David Gurr, like, hey, here's my fiddle.
We would camp out, and then there's something happening on stage. There's usually a contest, or there'll be performances. But then all around at these campsites, people are kind of jamming informally, and so there were plenty of people who were amused, I think, that a 9-year-old wanted to play, and so I could kind of hang on the periphery and play.
All right, and folks, seriously, go to
really cool.
YouTube or wherever social media. David Gurr, G-U-R-A. Fiddle stuff, really, really cool stuff. All right, David, you got a day job. You're hosting
this business itself,
Big Take podcast. What are you guys working on these days?
So the piece that we have out today is on Bill Huang, who was the head of Archegos Capital Management. He's set to go on trial, begins in earnest next week.
It seems so long ago, but now he's going on trial. Okay.
2021, it imploded, and I got to revisit what was a really wild and crazy tale that's going to come out, I think, in more detail once we get into the courtroom next week. But Bill Huang, of course, came of age working for Julian Robertson. He was one of the original Tiger Cubs, started his own fund. That fell apart when he encountered some difficulties with regulators both in Asia and the U.S., but he had some seed money left, started this family office, grew it from $200 million to $36 billion, and then that collapsed really calamitously back in 2021. And of course, in the years that followed, contributed pretty mightily to the demise of Credit Suisse.
So where is he now?
He's here in New York and New Jersey. He's dividing his time between both places, but I talked with Kathy Burton and Sri Natarajan, our colleagues here at Bloomberg, who, after all of this happened, went to his house in suburban New Jersey planning to drop off a letter asking him for comment about what had happened. And in fact, he was just there, sitting on his porch at a Costco plastic table and a plastic chair, greeted them, wouldn't talk about what happened or the case itself, but it kind of puts in stark relief the image that he's had on Wall Street. He made a ton of money, yet he's a very public, devout Christian, somebody who talks a lot about giving away the money that he's made, and leads this kind of humble life. He doesn't have an apartment on Central Park South or Central Park West. He lives in New Jersey, and he's facing now the prospect of spending his 20 years in prison. He's charged with securities fraud and wire fraud and racketeering. So very serious charges, all of which he denies. And I think in that courtroom in the coming weeks, we're going to get more detail about what kind of exit strategy he thought he had. If you remember, he's somebody who kind of built his business on swaps and wasn't very forthcoming about what he was doing. I think we can say to the banks, like, none of them knew the size of the positions that he had at these different banks. So not only are we going to learn more about his business model and what he was doing and whether that was on the up and up, probably not within the regulatory regime that exists, but also how he was able to get this past so many major institutions. I mentioned Credit Suisse, but Nomura, Morgan Stanley, among others, who took really big hits as a result of this collapse.
Do we know anything of his defense at this point? Was it like, hey guys, this is all part of a strategy, I was going to get us out of it?
It's a familiar refrain that he says and continues to say that if he needed to liquidate these positions, he would have been able to do so. That's something we've heard from a lot of people who have been found guilty of fraud in the past. That's what he maintains. And again, I think what this kind of shines a light on is when you look at family offices in particular, they are not bound by the kinds of regulations and disclosure rules that you get with larger hedge funds. So talking to Kathy and Sri, it sounds like this could, again, open the door to more conversations about whether or not these institutions that have gotten so large and manage so much money should have heightened rules. And I will say, they wrote an amazing piece kind of previewing the trial. One of the most amazing facets of it is he started this Christian charity in 2006. It now has about $800 million in assets itself.
Wow. Oh my gosh.
And so it's effectively, its returns are better than most hedge funds. It's like a Christian family office. And he's actually moved a lot of people with whom he worked at Archegos to that firm. I think 9 people are now working there, making more than $500,000 each per year. Wow. So it's a fascinating look that Kathy and Sri have done sort of at how he has been, not toiling in the exact same trenches, but still at least casually overseeing money in this new gig.
Wow, I'm just really stuck on the fact that they brought a letter to Jersey and he was sitting on his porch. That is some
wearing Adidas flip-flops. I know, and
a letter.
It is a wonderful thing about hosting this podcast. I've been back just a number of weeks, but to see the sort of doggedness of our colleagues here, and just Kathy is somebody who's covered Bill, I think for many decades, going back to the 90s when he was working for Julian. So to have that kind of broad sweep and that insight into how he's done his business is really illuminating and great fun to hear about.
What's coming up on the Big Take podcast?
Looking into Apple and sort of what's going to happen with that company in the near term. It's unveiling some products this week. And then also kind of monitoring what's happening in the Middle East as well. We did an episode a few weeks back sort of focusing on the state of play in terms of what might happen with the ceasefire. Those negotiations obviously fell apart yesterday, so we're thinking of picking that up again this week and doing something on that as well.
Yeah, it's weird to know where those negotiations are. You had, like, the one story on the Bloomberg terminal was about the negotiation. Then the next story was going into Rafah, and thinking about that. And kind of, I guess that's the state of war. It's in flux.
It's the state of war and this odd vacuum that we're in. And so, Paul, you're right. Like yesterday, we had the report that Hamas had accepted these ceasefire terms, and we're sort of waiting to see if Israel would accept them. In fact, that country didn't as the day wore on. And then looming large here is what happens with Rafah, and it is so sobering, so worrying about what might happen there. And we've seen Israel in the last couple of hours close off that entrance to Egypt. So yes, it's the state of war, but obviously this is sort of the prolonged agony of this continues. And President Biden's scheduled to speak today on Holocaust Remembrance Day, talk about anti-Semitism, and to kind of double down on what he said about what happened on October 7th as well. So we'll be listening to that very closely, of course, just to see what he says about what the U.S. position here is going forward as we see Israel kind of still taking steps to move into Rafah.
All right, David, thanks so much for joining us.
Paul.
David
Thanks,
Gurr. David's the host of the Big Take podcast. Again, the Big Take stories on the Bloomberg terminal. These come out daily from Bloomberg News, and they are deeply reported, in-depth looks and analysis and reporting on some really key topics.
Real storytelling.
Yeah,
it's
real
really
storytelling.
Nice.
I'm sure the reporters love getting assigned to these things because they're just really, really great stories, and a lot of resources go into it. And we need to leverage some of that good reporting, which we do with David and his podcast, because that's the future, kid, podcast. And David does that,
so
we appreciate that. So anyway, I mean, the advertising on our podcast is like blue chip. I'm like amazed. It's really, good.
You listen to our podcast?
Yeah, it's amazing. This stuff, the advertisers who used to be on broadcast television 20 years ago, and now advertising on podcasts. That shows you what you need to know about the economics. The S&P is up about 0.2%. NASDAQ absolutely flat on the day. 10-year Treasury, 4.44% on your U.S. 10-year Treasury. This is Bloomberg.